Are we live?
We are live, Spencer. How's it going?
Hey, you are looking live. What's up, baby? How's it going, man?
Good. Looks like Mitch is still finishing up over on live trading, but let's go ahead and get the show started. Pretty good day overall in the stock market, bouncing back today after yesterday's little sell-off. And we'll get to that, but let's go ahead and play the intro and get rolling.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojasik from Trend Spider. We have a
breaking news.
Yo, is it looking dark to you, Aaron? Are we looking dark or are we looking okay?
I think we look okay,
look okay?
but
Okay.
that's just me.
Beautiful campus marshes behind us. I love the ice rink. Now that we have the lights up, the Christmas tree lights and all that, and the ice rink, it's gorgeous back there. We need to do a segment where we like from the rink.
Yeah, we'll do that before the end of the holiday season.
For sure.
Yeah.
Okay, segment on the rink confirmed. TBD on that one. But what's up, everyone in chat coming over from live trading? Candyman Trader, what's going on? I guess he's Canadian. We got a lot going on today. We got some big guests today. I'm looking forward to Jesse Kaylor at 1 o'clock, ReWalk Robotics at 12:30. But at 12:15, Jason Less, the CEO of Riot Blockchain. They had some news this morning. They had a deal announced. We'll talk about that. Jason Less, ticker RIOT, Riot, one of the largest blockchain or Bitcoin miners in the world, coming on Benzinga Live today.
Yeah, if you're interested in Riot or just Bitcoin mining in general and some of these Bitcoin crypto mining stocks, we're going to talk to Jason, learn some more about that industry. I'm very excited about that. And then again, we've got a cool robotics company coming on after that. But Spencer, let's take a look at the top headlines of the day so far. So right now, we have Jerome Powell is testifying right now, correct? Or Yellen?
Yeah, Yellen or Powell, I think. Are they done? Does anyone actually know? Maybe we do this. I think they're done, but they could not be. Maybe we'll do this. Maybe if we want to have some fun later, we just bring them up on the screen and we just talk over them. But I think they're still testifying. They did. It's a 2-day thing that they always do. This in front of Congress, 1 day in front of the House, 1 day in front of the Senate. Today's day 2. Although the cat's out of the bag now. I don't know what else they could say. And I feel like, honestly, the more they talk, the more they just piss people off.
Yeah, Jerome Powell said yesterday, it was finally time to put that transitory label in the grave, put it to rest. It's done. And then Yellen today was essentially saying, not that inflation was transitory, just that some of the supply chain issues were causing some of this rise in inflation. So the hopeful case is that as these supply chain issues get figured out, inflation will come back down. We will see if that is the case, but let's go ahead and pull up our Benzinga Pro, Spencer, and we'll take a look at what the overall markets are doing, as well as some of the big winners of the day.
Dude, it's a pretty good day so far. First off, hit that like button. Hit the like button because we're having a good day, right? We're all up. We're all green. Well, not all of us, but some of us, most of us. Yesterday was just a sea of red out there. Today, kind of the opposite. Sea of green, unless you've got Salesforce, unless you've got Moderna. It's green. What can I say? I mean, we got 3/4 of stocks today trading higher. 3/4 of the entire stock market trading higher. That's great. Tell us what you're in today. We want to know. AB, I know you. We got to talk about your Zoom position.
Yeah, we can do that.
Yeah, okay. So it's a green day on Wall Street. Market's still trying to figure out what the hell is going on between Omicron. The Omicron strain.
It seems like the market's saying today, hey, look, we don't really care. We took a look at the COVID-19 numbers yesterday, and so if you're watching the show yesterday, here, I'll go ahead and pull up my Robinhood. So here, let's do this.
And while you do that, here's my handy dandy Benzinga Pro. And again, go to my watch list. You can see what the whole market that I have. Look at that, green on the screen.
Everything green on your watch list, Spencer.
Everything green on my watch list of the top components in every major sector and major index. Everything green today. It's one of those days. Throw a dart at the dartboard, you're probably up. Just like yesterday, you're probably down.
All right, so here, let me go ahead and pull on my Robinhood. I'll talk about my Zoom position. I'll talk about so real quick. So yesterday, when everything was when the market kind of dipped while Powell was speaking and everyone was talking about Omicron, I thought we could see some money flowing into Zoom. We did see that yesterday. I liked it as just a quick trade, but of course, like we talked about yesterday, I'm kind of in this purgatory on Robinhood where I can't do day trades. So, well, I can. If I do another one, I may be restricted from buying stock for the next 90 days, right? So Zoom, my Zoom call was up a lot yesterday. Zoom opened down today. I opened a Zoom put yesterday before it closed just to try to kind of hedge my position a little bit. This morning, I opened these Apple calls that are up over 100%. So if I see that, Spencer, I'm stuck in between a hard place and a rock?
Okay. Hard place in a rock. I'll allow it.
A hard place in a rock.
A hard place in a rock.
Because I could sell these Apple calls that I've made some good money on. I do think Apple kind of has hit a top for the day and may come back down a little bit. But if I sell these Apple calls, I will, lose my ability to maybe buy or trade stocks for 90 days, which isn't the end of the world. There are other brokerages out there, but I do like Robinhood. So who knows? Maybe I'll just hold these Apple calls into tomorrow, hoping for more strength in the stock. But
you're not gonna. Well, wait. When did you open them again? Sorry.
This morning.
Oh.
But Zoom. So Zoom, I sold my Zoom calls.
You did this morning.
Yeah. Ended up pretty even because they were up a lot yesterday. Zoom opened down today, so the calls got hit.
Wow.
I am holding on to this Zoom put right now. And then these snap calls as well. So here, let me pull up what we looked at yesterday, and that was the COVID-19 cases in the United States. So I said that this number here, let me get the screen pulled up so we can all look at what I'm looking at. There we go. Add it to the screen. So right here, so when we looked in at this, no, I don't want show all. So when we looked at this, we saw this number yesterday, or numbers for the 29th, that there was 216,000 new COVID cases, well above the 7-day average. I said, all right, Spencer, I'm going to be slightly worried if we see that number again in that range. Well, that number came down, only 100,000 new cases versus 215,000 new cases. So to me, that's saying, okay, that was just kind of an anomaly. We got a lot of reported cases in one day after the long weekend. They were catching up on testing from Thursday, Friday of Thanksgiving week and over the weekend. And so now it doesn't look as daunting. So, the market today is basically saying Omicron fears were maybe a little overblown. The sell-off was maybe a little too much yesterday. So a lot of buyers came back in. We actually saw that immediately, Spencer. Yesterday after hours, we saw the Qs spike up like 0.5% right after the market closed.
I feel like I was trying to, maybe it wasn't with you, but with Joel and Dennis in the morning, I was trying to be like positive, but they kept like hitting me down a little bit. But
who did?
I don't know. It's like they were so negative in the morning. I was trying to like
yesterday morning.
Yeah, really for the last couple of weeks. But yeah, yesterday, Friday, I was trying to like be positive here. I don't want to be that guy that comes out and says like everything is fine. But I also like didn't know if I really bought the fear and panic on Friday and Monday.
Yeah, I mean,
Friday
it's not always the case, but usually when people are kind of doom and gloom, it's very short-sighted, right? There's a red day in the markets, and everyone's like, oh my God, whatever. And so then when the next day stocks are back up, of course, that subsides and people are back in that buying mode. Yeah.
So I'm happy for you, though, because I was nervous about your Zoom trade. That was a risky business you did. You bought a out of the money Zoom call 3 days before expiration when you couldn't even sell it the same day.
That was kind of silly, but it did. I mean,
it worked out for you.
Yeah,
it worked out for you.
From where I bought it, so I bought it when Zoom was at about 208.5, and it went all the way up to 214. So we had like a $6 move that was at my back. The calls went up nearly 100%. We talked about it yesterday. If I were in a position to, I would have sold those to make some gains. But yeah, I mean, at this point, I could either, again, sell those Apple calls for a profit and then take that ban, or what I'm probably going to do is just hold them into tomorrow and hope that we see another good green day tomorrow.
Okay, a few more things I want to hit on here, and then we got some more fun stuff planned today. I want to talk about Twitter, okay? Because Aunt Cathie went dip buying yesterday. She bought 1.1 million shares of Twitter.
Wait, can you refresh that? I don't think that's right.
The chart?
It says Twitter's down.
No. Oh. Yeah. You're right. That is weird. Refresh. Let's go. Do. How long does my computer take?
There we go.
That's better. Thank you. Good spot.
Yeah.
Good spot. There we go. All right. Anyway, Cathie Wood, ARK Invest, bought 1.1 million shares of Twitter yesterday, 1 day after Dorsey stepped down as CEO. So going dip buying in Twitter. AB, what do you think? I mean, it's been is that a 52-week low? Is that a low of the year? Yes, it is, from yesterday. I mean, a new low of the year. The prior low of the year was January 19th, 44.40. Yesterday we got to $43. Now we've bounced today because the whole market's higher. But hey, credit to her. She knows what she likes.
Yeah, I mean, Cathie loves buying dips. She loves these big tech stocks. So basically with Twitter here, Spencer, if you're going out and buying Twitter here, not only are you betting on the new CEO, who seems to know what he's doing, what he's talking about. He's coming from being the CTO, the Chief Technology Officer.
Right.
You're basically betting that the company will be able to monetize its, hundreds of millions of users, right? There's some of these social media companies out there that have a lot of users, and investors certainly care about your users, your MAUs, monthly average users.
Active.
But maybe what's more important is, are you able to monetize off these users, right? We saw this with Facebook. When Facebook first went public, people were like, okay, Wall Street basically said, yeah, you guys got a bunch of users, but you suck at making money. And then what happened? Facebook figured their advertising out. They figured out how to personalize ads to users. And what happened was Facebook's revenue skyrocketed from those moves. And eventually, we went from Facebook stock being at 12. It went from $17 down to.
Well, we can look at the chart and find out. That's the beauty of Benzinga Pro.
So basically, the model is out there, right? The model is out there. You grab that user base. You learn how to monetize off of it. And you can make that argument for a couple other platforms out there as well, like Snapchat. It's a question of, will this leadership team figure out how to make a lot of money? Twitter hasn't been able to do it over the past 8 years. I mean, look at Twitter stock over the past 5, 6, 7 years. It's been kind of a dog.
If you bought the high right after the Facebook IPO, $45 in May of 2012, it took you basically a year and a half, a year and a quarter. It took you almost a year and a half. It took you about 16 months to make your money back in Facebook, because it wasn't until September 2013 that they got back above that 45. Now that all looks quaint now, but yeah, you're right. It wasn't obvious at the time, just like it's not obvious on Twitter now. Facebook has provided the roadmap. Snapchat's provided a good roadmap too. Here's the all-time chart in Twitter, right? It just goes to show.
Yeah, so we're at right now where we were in 2015. If you bought Twitter in 2015, despite all the growth of the app, how many more users have flooded in, how much more people are spending time on Twitter now versus Facebook, the stock is exactly where it is.
Well, remember the theory, like, that Trump being in the White House was going to be like amazing for Twitter. So if we go look at just when like just we'll call him mid 2016 or maybe when he got elected, so October 2016 or November 2016, that theory actually kind of played out.
Yeah,
a little bit. Twitter went from 19, or here we'll call it 17. We'll be generous. 17 until election day of last year. It went from 17 to like 50 during while Trump was in office. So having a tweeter in chief really did help. But those days are gone.
Tweeter in chief, I like that.
I didn't come up with that.
I see in the chat, Loco Trader wants us to check out Snapchat. Let's go ahead and pull that chart up, Spencer. Snapchat's having a great day.
Are you on Snapchat? Do you use it?
I am on Snapchat. Yeah.
Yeah. Snapchat is, I've said this before, probably one of the best apps on my phone at getting me to open the app. They send me notifications like once a day. I'm probably on Snapchat maybe 10 seconds a day on average. Right.
I think I'm right at that age range where like people younger than me really use Snapchat. I've had Snapchat literally since like I think like the first year it was available, like for a very long time.
Yeah.
And I feel like I used to use it a lot more than I do now.
Me too.
But from meeting and talking to some, like I think I've told this story before, but I was working at a golf course in college, and one of the kids I started working with was actually in high school. His name was Davis, and he's like, yeah, Aaron, like, we should hang out after work sometime. Like, let me get your Snapchat. And I'm like, dude, like, just take my number, text me. But like to him, as like an 18-year-old, that's what's normal is to ask for a friend's Snapchat. So it's like that is for a lot of that age range from like 15 to 20. I feel like the primary method of communication.
Yeah. Now, obviously, if you're looking at this monthly chart, you see that it was pretty brutal. October for Snapchat coming off their earnings report. It should never be this easy, right? Basically, in 2021, Snapchat went from, let's even go to a daily here, but it went from like 50 to 80, right? Should it have done that? Look at this. This guy's got gappy all over the place, right? You got this weird cloud going on there. I hate that. It looks like Snapchat did turn a corner in terms of their business. Remember, they weren't growing for a while, but they're growing now. Their MAUs are growing.
Well, their whole, everything had a great run during COVID, but their Snap specifically, Snap got down to, I believe, below $10 on the March 2020 lows and went from, maybe $8 all the way up to $80.
Yeah, it got down to 12.
So,
or no, 10. You're right, 10.
All right, we'll call it 10.
Yeah.
10 to 80. That's 8x bag over a year and a half.
Yeah.
And Snapchat's one of those stocks that benefited from COVID, right? Because kids were home.
But do you remember people were looking at Snap Maps, or do you know what that is, right?
Yeah.
Yeah, remember people were using that as like a reopening indicator. Oh, people are out on Snap Maps. Do you know?
Really? I don't specifically remember that, but
right.
It makes sense. I don't know if Snap was giving that data out, or if maybe people were just collecting like alternative data on their Snapchats. But yeah, again, I do like this stock long term just for that reason. For the reason that, hey, look, a lot of kids are using this as their primary method of communication, and if we have any indication from history, it's that these social media companies will get better over time at monetizing that user base. Of course, there are exceptions. I'm sure there will be companies that look like, oh my God, they have this many users and they never figure out how to monetize it. But it's, to me, this is one that I like long term. I'd be curious too, Spencer. I know we don't really talk a lot about analyst ratings on this show.
Well, it's because they haven't been relevant for a little while, and by relevant I mean they haven't really moved markets as much as they used to.
Right, but I think if you look at the price targets for a lot of, and they're not just like little analysts, like Morgan Stanley had an $80 price target on Snapchat. Goldman Sachs had a.
Let's go look.
Go back a couple months. Oh, we can just click all. Yeah, the more you learn. Spencer's got some good tricks.
Why are we not?
Well,
you're clear. Clear everything. Hold on. Start again.
Yeah.
Snap.
Alyssa in the chat. Shout out Alyssa is confirming my kind of thesis there that kids 2000s kids and up exclusively lose Snapchat. I don't know if, I mean, I assume these investors, like institutional investors, know that, but sometimes they don't have their like pulse on the, or finger on the pulse as well as maybe we do, like being younger, being able to talk to some of these people.
All right, I haven't been in this. This just shows you how long it's been since I looked at ratings.
So if you highlight them, like drag like you're highlighting an Excel sheet, the price targets, it will give us an average on the bottom right. Really cool feature of Benzinga Pro, by the way.
Oh wait, really?
Yeah.
I don't think I knew that.
All right, so maybe do you want me to show you?
I'm formatting my damn table because I don't care about the analyst name. I don't care about the time. I just care about the action, and I care about
who was it, right? I care more about what Morgan Stanley has to say than I don't know.
Right. This is going to show I have not been in this table in so long. I basically never look at ratings anymore because why? And I don't even need the name of the company. I know the name of the company.
Shelly, I don't know what you're talking about. Send photos. That's what the app was made to do.
Dude, Snap Camera. Do you use that?
I have it on my laptop. Yeah,
it's freaking amazing.
I could turn it on right now and give myself some
freaking awesome
cool filters.
It's so cool.
I like using the bald filter on there.
Wait, okay. So this is a list of every rating in Snapchat, chronological order from newest to oldest. You're saying if I highlight them?
I'm saying just like drag your cursor across the. You don't even need to do it just on that column. Yeah, but see right there on the bottom right of your screen.
Holy crap!
It gives us the average.
How did I not know this?
I don't know. You learn some things with AB.
All right, so let's look at post earnings here. Post earning.
So this was after Snap's bad earning report.
Yeah. Well,
because look, they all lowered. They all lowered.
Yeah. It was.
What are you doing? I want to see the average.
It was KeyBank. No, I know. I'm just fixing it. So, $93.
That's the average. And
no, that was their prior. I'm on the wrong column. This is their new.
Oh, okay.
This is their new. Sorry. $80.
$80. What are we at now? 50?
Yeah.
That's more than a 50% move. 50% would bring us to 75. So yeah, I mean, to me, it's like I don't live and die by analyst ratings, but look, some of those people, maybe not all of them, some of them are smarter than myself and spend a lot of time. It's their job to analyze these stocks. And if they're saying, hey, look, there's more than a 50% upside in Snapchat, I kind of like that.
I have a dumb question. Do you know what Smart Score is? No, not us. Not me and you.
It's some sabermetric of sorts. It's a
all right.
What's Billy Bean?
Yeah,
he came in and instituted
fair. But the other thing I would say that could fly against what you're saying, Aaron, is look at all the green. Greg, green means overweight / buy / outperform. Right. Look at all the green. If I don't know if this is going to happen, but let's go to my details and look at the chart. Okay. If you get, we find ourselves, it's January, February, March, whatever. Let's say next earnings report rolls around and Snapchat has another bad one, right? Now you get on top of that weak report potential, you get the follow-on catalyst of maybe a lot of analysts come out and say, oh, I think our thesis was wrong here. We're downgrading to neutral. And why does that matter? Why do analysts matter? Because analysts, first off, have a bullish bias, right? They have a bullish bias because being bullish helps them get access to the company. So when analyst turns bearish, that's interesting because it means they're fighting against their own bias. The second thing is analysts are the people, the sell-side analysts, that's who we're talking about here, are the people that are having conversations not just with the company, but with investors on the street, with institutions, with hedge funds, etc. They are, in theory, the people that know what's going on at the company and that know the story. And if you're, some hotshot manager and you are looking whether you want to freaking, you're doing your DD on some stock, you hit up this firm. You hit up this analyst at this firm and they give you the scoop. They are the ones that will defend or not defend a stock to you.
But
right?
Jay Rice is bringing up a good point in the chat. He's saying, remember, all the analysts hated it when it was under 10.
Yeah, we're not saying they're always right. Right.
So, but it brings up a good point. I believe it's from this lady that I follow on Twitter. Her name's Helen Meisler.
Yeah, she's good.
Her pinned tweet is nothing like a change in price to change sentiment.
Yeah.
Right? So it's easy to hate a stock when it's under 10 and not moving. And when it goes from 10 to 50, your sentiment might change a little bit on it. You know, I know my sentiment on Tesla has changed a lot due to its price movement. I've been like, okay, it's overvalued, you know, here, there, wherever, and then it keeps going up, and I'm like, all right, I'm time to throw that sentiment away.
Yeah, but imagine if you're a Snapchat and you're like, oh crap, we just had a bad 2 quarters in a row or whatever. If you've got a bunch of analysts out there that you know have overweights and buy ratings, you know, you can go to them. And you know that they will defend you to the street. They will defend you. If you have a group of analysts that have neutral ratings or sell ratings, they're not going to defend you, right? It creates a base of, basically it's like, it's offense versus defense, right? Right now, you know, the analysts are pretty much exclusively on the overweight buy outperform side. Do we have any sell ratings here? Not recently. Dear Lord. So for Snapchat, it creates like a network of people that are going to defend the stock. That could change though, and if that does change, I'm saying if we get another quarter or two like we got the last time around, or if the stock just keeps going down, frankly, maybe the analyst, like you said, change price, change sentiment, change their mind. Now all of a sudden you have less people with connections willing to defend, to come out, stick their neck out, and defend the stock publicly, and that just creates one more negative tailwind. So, okay, enough on the ratings here. I mentioned Twitter, and then I also wanted to talk about, what was the other stock that Cathie bought? Robinhood. Cathie bought Robinhood. How is Robinhood doing today? This is interesting because Robinhood had the last of its lockup expirations today. It could mean nothing, or it could mean something. All it really means is that all the shares that were locked up prior to the IPO are now eligible for trading. If you work at Robinhood and you had shares or RSUs, whatever, locked up prior to the IPO, you can now sell those shares if you want to. Not that you would, but at least now you're allowed to. So Robinhood, is that right? That's right? Down 4% today. Yeah. So new all-time low. There's nothing real to say about it other than it's not just Hood. If you compare Hood to like Coinbase, a lot of these actually Coinbase has turned it around. Maybe that wasn't the best comparison, but wow, look at that. Coinbase has turned it around here. I didn't realize Coinbase had come up that much. But anyway, massive downtrend. You can say all you want, but the market just hates this stock right now. And there's only so much you can do when that happens. And out of curiosity, just to bring this back to our last segment here on the ratings, the analysts, here we have, okay, so it looks like there hasn't really been any changes yet. You had a couple of them lower their price target after earnings, Goldman, Rosenblatt. See, look at that. Goldman, very influential, which was an underwriter. I know this because this is how I know Goldman was an underwriter. You go look at the dates here on all these ratings, and oh, come on. Garbage internet here. Hold on. Let me fix that. Okay. You see all these ratings on August 23rd. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's not an accident, right? You have 10 ratings on one day, and it's a couple weeks after the IPO, right? Like a month after the IPO. That's because if you're an underwriter, there is what's called an analyst quiet period, where you are basically not allowed to say anything about the stock. Once that quiet period ends, I don't know why my pro is doing this. I have to call support. You're allowed to come out and give a public rating. Now, obviously, if your firm underwrote an IPO, you're not going to come out with a sell rating. That wouldn't really make a lot of sense. Sometimes, as is actually the case here, you did have a couple of firms come out with a neutral. Oh, look, JP Morgan with an underweight. That is highly unusual. Dude, what is going on with my pro? Highly unusual to see a firm come out with an underweight rating on a stock that they underwrote the IPO. But that's what happened here. So that's a red flag, number one. But my point is, dude, what? Okay, my forget it. My point here is just to say that this is a point that Josh Brown brought up a couple years ago. We're talking about Slack, and Slack did a direct listing, and he was bullish Slack, and prior to Slack getting acquired by Salesforce, it wasn't a great performing stock, and at least prior to COVID. And he was like, I underestimated the importance of having analysts on the street willing to defend the stock publicly. And in the case of Robinhood, you've got a bunch of analysts that gave out positive ratings after the IPO, that underwrote the IPO, but the only ratings we have since then are some downgrades, basically. So analysts not really doing a good job is my point in that. So okay, Robinhood was a buy from Cathie. Twitter was a buy from Cathie. I think those are the only things that I want to hit on from a Cathie standpoint, because I did see she bought dips yesterday.
Yeah, and that might be a sign of maybe Cathie's influence, not just on overall retail investors maybe waning a little bit, because it doesn't seem as if people saw, oh my God, Cathie went out and bought Robinhood and went out and rushed to buy it. That we used to see that a lot, where okay, Cathie bought X stock, the next day it's up 5% or whatever. Spencer, I see a few position in the chat, a few questions in the chat saying, when's Riot CEO coming on? He will be on in 15 minutes. That's Jason Less. Excited about that. We are going to learn more about just the Bitcoin mining in general. So if you have any questions about Bitcoin mining, about Riot specifically, drop them in the chat and we will ask Jason them directly. This is what I'm really excited for, because we are going to see this industry continue to grow. Spencer, if I had to guess, we will see more and more public companies arise that are focused in crypto mining, and I really don't know a lot about it.
Yeah,
I know it takes a lot of energy.
I'll be honest with you. Like, I've spoken to a number of these executives. I've spoken to the CEO of Mara, spoken to Frank Holmes, who runs Hive Blockchain. I've spoken to Hut 8, and I need, this is a thing that I am still learning a lot about. The Bitcoin mining and the whole Web3, the whole Web3 thing is a space that I am trying to read and listen, articles, podcasts, a lot more of, because the whole thing still confuses me, to be honest with you. Even though I own some crypto, I own it more so because there are people that I trust that tell me to own it, not because I necessarily understand it, which is maybe not the best thing. But speaking of crypto and crypto stocks, these miners very often move with the price of Bitcoin, because
oh really?
That's what they do, right? They're miners. That being said, let's do a crypto update.
Whoa. More like green map.
Yeah, heat map is green today across the board. I don't actually know the last time I can remember that every single thing on here was green. Maybe a week or two ago.
Let's see what's leading the charge. I see Algo up 12%. I see Matic up 15%.
Look at Solana up almost 10%. Let's go. Where's my cost basis at? I don't know. Lower is the answer.
Yep. Bitcoin and Ethereum, of course, both up. Looks like Bitcoin's up about 3.3%. So good day to bring on the CEO from Riot Blockchain. Shiba Inu, pretty flat up 72%. Dogecoin up 9.92%. Polkadot up nearly 0.5%. Ripple up more than 2%. Cardano, like you said, Spencer, up 3%. Spencer's checking in on his Cardano position.
Yeah, well, I bought it at, come on, help me out. I bought it at just under 107. So we're at 231. And that was almost exactly 3 months ago. No. Yes, almost exactly 3 months ago. I can't do math in my head. So, nice. Go me. I need to be buying more crypto. I decided that I'm not going to be contributing to my 401k anymore. And I'm going to be, at least for the time being, and I'm going to be doing some crypto stuff because crypto is the future. So anyway, we're going to talk more about this with Jason less than 10 minutes. But good day for the market. That includes cryptocurrency. Shout out Bitcoin. Shout out Solana. Shout out ETH. And shout out to everyone in the chat who also owns crypto. As a reminder, you can get some free Bitcoin. Free Bitcoin. All you have to do is download the Voyager app, use the offer code ZING, Z-I-N-G, fund your account with $100, and make your first trade. And they will give you $50 in Bitcoin.
Free Bitcoin?
Which is worth more today than it was yesterday.
Free Bitcoin?
That's what I said. Free BTC.
Maybe we can, Spencer, talk to Jason about sending us some free Bitcoin.
Jason Raznick?
No.
Oh, Jason Less.
Yeah.
Sorry. That one went over my head. Yeah, we can see if we can get the CEO of a publicly traded Bitcoin miner to give us some free Bitcoin. Roy said he just started doing crypto mining himself. We have some people at Benzinga that mine crypto. Maybe we should get them on the show. We should get like Ryan on or Enver, talk about their mining. Yeah, Hex 214 Pony. I have not actually decided yet how I'm going to do some crypto retirement stuff, whether it's iTrust or Bitcoin IRA. Those are the two big ones, but that's my plan for next year anyway. Okay, so we've got 8 minutes before our first guest is here, and I wanted to take this time to
wait. I want to talk a couple things.
No, go ahead.
I never heard your story about this morning.
No, yeah, that's what I was gonna say.
Okay, but I have another thing too.
I almost died this morning on the way to work. Born to be free, I would do that. I almost died this morning on the way to work. I had one of my like top 3 most like terrifying like nightmare scenarios happen like while you're driving. You know, like I consider like my top 3 nightmare scenarios to be.
I think I've already had all my nightmare scenarios.
Really? Okay, I've not. I've had 2 of them now.
Okay,
I've had 2 of my top 3. One of the top 3 is, this happened to me years ago, is you're driving and all of a sudden you see like a spider like come down from the ceiling.
Okay.
Like right next to you.
Yeah.
That happened to me. I almost crashed doing that. That was years ago. The other one that happened to me this morning was when driving down the highway here, down to Detroit. It's 6 a.m., right? It's dark. And all of a sudden I see like the cars to my left that are ahead of me like swerve out of the way. I'm just like, what are they doing over there? And then out of the freaking blue or black, because it's dark out, a tire rolls across the highway probably like 5 to 10 feet in front of me. And I had to swerve out of the way. And then the people behind me had to swerve to the right, obviously, because it was rolling. And dude, my heart stopped. It was so, because it was black. It was, dark black tire, dark out, no lights, couldn't see it. How nobody crashed is a miracle, right? Knock on wood for that, but like.
Well, I'm glad that you're okay. Sounds scary,
dude. It was so scary. I had to like pause my podcast and like breathe.
I've had one time I was driving on, actually just probably all these events probably happened on I-70. I-70 runs from like somewhere out on the West Coast, maybe Vegas, all the way to Baltimore. But it's what I took in Missouri to get from St. Louis to Columbia, where I went to school. It just shoots all the way across the state of Missouri from St. Louis to Kansas City.
Yeah.
Anyway, I'm driving one day and I'm behind a semi, not like too close.
Yeah.
And I see one of the semi's tires kind of frayed, right? Like there's like one like thread of tire that's like hitting it. I'm like, all right, that's kind of worrisome. And I'm like,
he blew out in front
I'm
of you?
watching it. Yeah. And I literally like knew it was going to happen. I saw
Okay.
that like 5 minutes before and I was following this and I kept watching the tire. And then eventually that tire did blow. And I was lucky enough to another time I was in the left lane on 70. It's just a little 2-lane highway once you get in like the middle of Missouri. And a semi that was to the right of me, literally, like I was just in their blind spot or something, and literally just started merging in the lane. Like if I would have stayed in the lane, I would have got sucked under the semi. So I had to go out on the left side of like the shoulder. Luckily, there was nothing on that show. You know, if there was like a car parked on that shoulder or something, I would have been screwed. But luckily, there wasn't. And I'm not really like a road rage, like mean, like type of guy.
Really?
But I got like back on the highway, like went up next to the semi truck that ran me off the road, was like cursing at him, found the number on the thing, called the company. It was like,
wait, did it say how's my driving? And you called, you're like, your driving
I just
sucks.
found the company, and it was like some trucking company, and I was like, yeah, dude, this dude, like, look at your routes. Whoever was driving on 70 this morning going west, like, completely ran me off the road, and they were like, we take this very seriously. I'm like, well, I freaking hope so, because like, if you don't take that seriously, then you're not doing your job.
Yeah.
But yeah, I mean, driving is without a doubt the most dangerous thing we do
For sure.
every day, and I think
as
we
humans.
overlook. Maybe we should start, just counting our blessings every time we get to and from somewhere safe.
If only we had a few companies working on like self-driving cars.
Oh, I can't wait. I think that's gonna be one of the things one day, Spencer, that like if we have kids, grandkids, they'll be like, oh my God, you guys like drove? Like you guys were doing that?
Yeah, you might be right. By the way, yesterday you asked me why do I want a dash cam?
Yeah,
dude, this is literally why I want a dash cam.
We could play you the tire video right now,
dude,
if we had that set up.
This is literally it. So, by the way, in case you're wondering, my last and we'll bring Jason Les here on in a minute here, but my last nightmare driving scenario, which has never happened, nor have I ever heard of it happening to anyone, but I can't get it out of my mind, is when you're driving underneath like a highway sign and the sign comes down.
Yeah.
Which has never happened to anyone that I've heard, but
yeah, but you could say that about like walking too. You could be walking down the street and some thing falls. There was some sports team. They opened a new team store and the logo fell like on the first day.
Oh, that was the Guardians. That was the Cleveland Guardians. That was like last week.
Yeah,
I saw that.
The thing just fell off. That's like, all right. That's not a good start. Speaking of sports, real quick, last thing that I was going to mention before we get to Jason Les, the CEO of Riot Blockchain. Spencer, they have this new Tom Brady documentary.
Okay.
It's like a documentary series. I think it's on ESPN Plus and Hulu. It's like 10 parts. I think they've had like the first 3 out. I was thinking about it while I was watching it. Tom Brady has to be the first athlete to have like a documentary made about him while he's still playing.
He's got a lot of stuff made about him already.
Okay, but like I can't think of another, like all the Michael Jordan well, maybe.
Yeah, I don't know, man.
We'll look into it.
Yeah, there's a lot of stuff going on, about a lot of content around him.
But either way, for him to have like a full enough career to have a documentary series made about him while he's still playing is incredible. Sure. One of my favorite stats is like there's a couple guys, but Calvin Johnson I know for sure. Calvin Johnson came into the NFL while Tom Brady was playing, retired, and got inducted into the Hall of Fame, and Brady's still chasing another ring.
Yeah. Hey, Firat King in the chat is asking about SPACs. We have 2 recurring SPAC segments on this show every week, Monday and Friday. We were actually supposed to do a SPAC segment today because we had an interview lined up, but our interview had to cancel last minute, so that fell through. But I wasn't here Monday. I don't know what happened there, but we do have 2 recurring every Monday and every Friday at 11:30 on this show. We have a recurring SPAC segment. So I'm not ignoring SPACs. We had Chris on twice last week. Was it last week?
I don't know.
Or the week before? I don't remember.
Wait, yeah, guys. Spencer was if you guys watched the show on Monday, Spencer was very worried that I was going to take it off the rails, that the show wasn't going to survive. So let Spencer know in the chat that we had a good time on Monday. Yeah. We missed him. It's better with him here, but I thought that we did a good job of keeping the show going without our our leader.
I think you did well. Aaron.
Oh, Patrick Starr saying LeBron had a documentary in high school. All right, that's
Perhaps.
all right. So I take back what I said.
Whatever. All right, let's bring on here our first guest of the day. He's here. He's backstage. Jason Les. He's the CEO of Riot Blockchain. This is our. We should sit up straight. This is like a real. Not that our other guests aren't real, but this is like let's go. Big time CEO, Jason Les. Let's get him on the show. AB. Where's our special guest intro? Do we still use that?
Yep, I got it.
Jason Les, CEO of Riot Blockchain. How are we doing today?
Very good. Thank you for having me, Spencer and Aaron. I love the intro.
Thank you. We only reserve that for our top of the line.
Awesome.
Yes. Yeah. Excellent. First off, I hope you had a great holiday. A nice long weekend. It's good that we have you on today because you guys actually had some news this morning. You announced an acquisition. You're buying ESS Metron for $50 million in cash and stock. Tell us about that deal.
Yeah, I think a simple way to describe this acquisition is just another step that we're taking to further vertically integrate our business. Riot acquired Windstone earlier this year, which is 300 megawatts of capacity built, 400 megawatt expansion going on right now. And a big part of building this Bitcoin mining infrastructure are the electrical components that go into it. That's not necessarily as sexy or exciting as the miners themselves, but when you're deploying the scale of miners that are being talked about in the market these days, there is so much critical electrical infrastructure that goes into that. The ESS Metron has been a key partner and supplier to Windstone over its history. So with this acquisition, we are taking further control of our supply chain, de-risking our expansion, and bringing on an incredible team with a lot of engineering talent that we think is going to drive future innovation with what we do. We announced a couple months ago we were deploying the first industrial scale immersion cooling deployment for Bitcoin mining, 200 megawatts, 2 buildings of that. And ESS Metron was a key partner in developing that. So, as we expand further into immersion and keep working on that project, we wanted to bring the engineering talent in-house. So we couldn't be happier to have these guys under the Riot umbrella now.
I would disagree with your assessment that it's not as sexy. Oftentimes we talk about like the thing behind the thing. The thing behind the thing can be very sexy, even if it's not, the Bitcoin miner. It's the supplier. So can you maybe give us a breakdown as far as just where your biggest expense, like obviously with regards to the rigs and all that, but where your biggest expenses lie that enable you to mine?
The primary expense is the electrical infrastructure. When you're putting together a building, the building itself is an expense, isn't the biggest, but when you look at what it takes to get, let's say 100 megawatts up and running, we have high voltage transformers, we have medium voltage transformers, low voltage switchgear, we have medium voltage cables, low voltage cables, we have power distribution units. All these things are the primary components that go into making a Bitcoin mining operation. And then, of course, it's the team and the expertise that goes to putting that all together. So, electrical components, definitely a very big part of making a mining operation happen. Now, I think we fundamentally believe is the more we are building things, the better that is going to position us to produce, mine, capture as much Bitcoin as possible. And at Spencer, to you and me, the electrical component is exciting. Just kind of to other people that are maybe newer to the industry, maybe newer to looking at Bitcoin mining, might not be as clear everything that goes into it besides the miners, because the miners get the most attention. And we do a lot of communication efforts to highlight what goes into building Bitcoin mining operation. For those who don't know, the Windstone CEO, Chad Harris, is on Twitter every single day uploading pictures and videos of the build out we have going on at that site. So we hope through that and through this acquisition and highlighting what we're doing here, people start to see more of what's really going on in the nuts and bolts of Bitcoin mining.
So, Jason, when this whole crackdown in China happened a few months ago where they said we don't want any more mining in China, a lot of companies were looking in the U.S. for different regions to bring their mining to. So, we've heard about upstate New York, maybe Maine as a potential place. How did you end up picking Texas?
So we have been looking at Texas for a while, and there's a number of reasons that go into that. First, from a regulatory standpoint, I don't think you can ask for a better state than Texas. There's a bunch of states that are becoming very bullish and supportive of Bitcoin and Bitcoin mining right now. Wyoming certainly comes to mind, but Texas, they understand Bitcoin mining. The politicians there, lawmakers, they get it. I was fortunate to have the opportunity to meet with Governor Abbott a few weeks ago, and he has made public statements. They want Texas to be a Bitcoin mecca. They want Texas to be the Bitcoin mining capital of the world. So when you look at regulatory risk being one of the key risk areas in this space and wanting to mitigate something like what happened in China ever happening to your operations, you want to go to a very regulatory friendly environment, not only from a Bitcoin perspective, but also just from a business perspective. Texas is a very business friendly state. So that's kind of the qualitative side of it. But then, also important is the energy costs for Bitcoin mining. That is our number one input. And Texas has very low energy rates, and they have an abundance of capacity as a result of having the deregulated energy market known as ERCOT that drives energy there in Texas.
Right. So Texas has a long history of, just energy in general. What was the bill? I know Governor Abbott passed a bill regarding cryptocurrency. Do you know what that was? I don't
believe that pertains specifically to Bitcoin mining. I think that was a bill relating to the acceptance of Bitcoin for different businesses, but wasn't specifically focused on Bitcoin mining.
But it was kind of showed that, hey, look, we're trying to be a forefront leader as a state in this field. So and then can we talk a little bit more about just what expansions have you guys been working on in the Whinstone facility?
Whinstone, yeah. So we acquired Whinstone. We closed that acquisition back in May. And at that time, Whinstone had 300 megawatts of Bitcoin mining infrastructure built. And with that, it made Whinstone the single largest Bitcoin mining facility in North America. So the single largest, as measured by that developed power capacity. In one specific location, that was the largest site. As soon as we closed that acquisition, we announced an expansion plan to add 400 megawatts of Bitcoin mining infrastructure. So over doubling the size of that site. And we started that right away. The first building from that expansion started coming online actually just over the past couple weeks. We expect that expansion will be completed. The entire expansion project, which includes a total of 4 buildings, will be completed over the next 2 quarters. So a very rapid development time. One of the key things we got with the Whinstone acquisition is the extremely talented development and execution team there. There's very few people in this industry that have experience building Bitcoin mining infrastructure, especially at that scale. And I think that's demonstrated through the speed at which they've been able to drive this expansion, which thus supports the deployment of all the miners that we've ordered from Bitmain, entering into purchase agreements over the past 12 months.
Notable question here from our chat, Jason. As we all learned earlier this year, Texas has a rather unique electrical infrastructure. I guess I believe you when you say that you're told that Governor Abbott wants Texas to be the mining capital of the world. But has what happened earlier in the year? Did that cause you any give you any cause for concern?
No, and I'll talk a little bit about that. So, like we touched on, ERCOT is the energy grid for Texas, or 90% of Texas, is a deregulated energy market. So energy is being bought and sold in an open market there all the time. Additionally, Texas has a lot of renewable generation. It is the biggest state for wind generation in the United States, and there is an abundance of solar being constructed there. So what that results in is intermittent supplies of power. Power is not always being produced exactly when it's demanded. It's being produced when the environment is generating it. So loads like Bitcoin miners are a huge asset to the ERCOT grid, because we will come in and buy that energy no matter the time of day. And more importantly, we have the flexibility to shut down when the demand for energy is very high. That's exactly what happened in Texas earlier this year in the winter storm. We did not own Whinstone at that time, but Whinstone stopped operating in that emergency environment. And through the power that they had secured through a long-term low-cost power purchase agreement, they were giving that power back to the grid.
Got it. So Jason, for some of our audience that may not know too much about crypto, I want to talk about hash rate, right? Spencer's here is talking to me about hash rate all the time, all day. But I don't know if I understand it completely. What is hash rate and why is it so important for your company?
Sure. So Bitcoin mining is basically miners globally competing to find the target output to an equation, an algorithm. And it's just pure guessing to do that. There's not necessarily like an ideal technique. Miners are putting random numbers into an algorithm over and over again until they get that correct output. So the more guesses you're doing, the higher your expectation is for finding that right answer, finding the Bitcoin block, and then getting the block reward for doing so. And that's what a hash is. A hash is one guess. You are getting a hash of that algorithm per second. So right now, the Bitcoin mining network has a total of approximately, it's been very volatile lately, 150 exahash. That is a number, I'm not even sure how to put that number into English, how many jillions, billions, whatever that is, guesses going on per second. And every miner is trying to, increase the number of guesses they have by accumulating and deploying more and more hash rate.
Something I always like to ask Jason whenever I talk to like a Bitcoin miner is, aside from hash rate, how else what is important to you in terms, like what metrics are important to you when looking at, a Bitcoin miner and trying to understand the good from the bad?
Well, besides hash rate, the cost of production is very important. Right now we're in a very strong market for Bitcoin mining, and the focus is really often all about scale. And of course, we're a part of that game. We have industry leading, power capacity and hash rate deployed and hash rate on order. We are definitely all about scale. But when the margins are so big like they are right now, there tends to be less focus on that cost of production because it doesn't seem as meaningful. The difference in margin from, let's just say 3 cents a kilowatt hour all in cost and 5 cents a kilowatt hour all in production doesn't look all that different right now. But it starts to matter a ton during less desirable market situations. Riot has operated in Bitcoin mining for about 4 years now. We've lived through different market cycles, and we understand what happens during bear markets when the price of Bitcoin goes down and your competition in Bitcoin mining is also going up. That really compresses margins at that time, and having the low cost of production allows you to remain profitable during those times, so your business sustains and you are able to continue your expansion. So that cost of production is very key. And then the other very important thing I think I'll add is the team that you have. I know Bitcoin mining looks like, just a bunch of computers, miners stacked all over the place, powered on, and that's what's driving, your production. But having a team that is capable of deploying that at scale, executing on growth plans and maintaining that is very, very important. And this is, like I said, this is a new industry. There is not decades of talent in the space. Talent is very competitive. So having a team that's experienced and know how to do this, I think is very, very important. There's more to this than just buying miners from Bitmain.
Here's a good question from Dustin Ross in our chat. Would you ever consider a Bitcoin dividend?
I don't know about the legal implications of that.
That's an interesting one.
If you give a dividend, all the shareholders have to be able to receive it, right? So,
right.
I don't know if the mechanics are there yet to receive a Bitcoin dividend, but this industry is evolving on a regulatory front in so many different ways. Who knows what the future holds? What type of regulatory guidance that might come in that area?
Yeah.
Are there any plans, Jason, to expand beyond mining just Bitcoin?
We are a pure Bitcoin company. That's how Riot defines itself, as a Bitcoin company. We believe in the long-term value proposition of Bitcoin. We believe in the implications it has as an alternative store of value and as a tool bringing freedom around the world. And that's the future that we're trying to support. So we are.
But it certainly had to come up in executive meetings before. Like, what about Ethereum? You just not interested in it?
I think we made the decision to be focused specifically on Bitcoin, I think a long time ago, and that's been a key part of what drives our growth and what drives, I think, our culture and the passion amongst our team. It's not just about, finding whatever coin might have the highest margins at that moment. It's about, what are we doing? What is the reason for all this building and all this growth? And as miners, that is, we are driving the Bitcoin blockchain forward. We are providing security to the Bitcoin network, and we are helping foster the properties that make Bitcoin valuable. So our team is behind that, and I think that's why we'll remain focused on specifically Bitcoin.
Got it. Well, Jason, we have some great questions in the chat, but we are running out of time. Spencer, did you have a final question?
Yeah, let's do real fast as we go in here from the chat from Happy, just referring to the fact that Bitcoin halves every 4 years. How do you maintain that hash the same efficiency on on your hash rate when the
halving
when the halving occurs every 4 years?
Yeah, so every 4 years, the block reward for Bitcoin mining gets cut in half, and that's a key part of Bitcoin miner revenue. That Bitcoin that you get for finding that block through the race we were talking about earlier. And while that Bitcoin reward has gone in half, the price of Bitcoin has gone up appreciably over the life of Bitcoin. While not a guarantee for the future, historically, every halving has kind of been followed by a pretty meaningful increase in Bitcoin price in the following 12, 18 months. And that's why Bitcoin mining revenues are higher now than they ever have been, even though there have been 3 halvings for Bitcoin so far. Another thing that plays into Bitcoin miners' revenue is transaction fees. Historically, transaction fees have been pretty small. But over recent years, as Bitcoin has grown in adoption, that's become a more meaningful part of Bitcoin miner revenue. And groups like BitUda, if anyone's interested in the Bitcoin mining space, certainly recommend you check out BitUda's research as an independent party that covers this. And they are forecasting pretty meaningful increase in transaction fee revenue for Bitcoin miners over the next 10 years. So while that block reward does get cut in half, there is an expectation that transaction fees will continue to increase, and we are, believers in the long-term value of Bitcoin. So we hope to see the price of Bitcoin increase over that time as well.
All right, Jason Less is the CEO of Riot Blockchain. Jason, we appreciate your time today. Thanks a lot for coming on Benzinga Live. Have a good day.
Thank you, Jason. We got to get you back on anytime. You got some more news.
All right.
Yeah,
have
absolutely.
A good one.
Thank you, guys.
All righty. Hey, we're running behind. What else is new? Our next guest is here backstage. Larry Jasinski is the CEO of ReWalk Robotics. Let's get Larry on the show. Do we have our other special guest intro? Oh, I did the same one. I apologize. Larry, what's up, man? How's it going?
So, Larry, what do you think about Bitcoin? No, I'm just kidding.
I think they should be investing in robotics.
Okay.
Oh, yeah. Hey, there's probably a parallel somewhere. Anyway, Larry Jasinski, CEO of ReWalk Robotics, ticker RWLK, if that's right. Larry, tell us about ReWalk, and then I got some questions. You've got a pretty interesting background and a pretty interesting story, but tell us about the company first.
Well, first, the company, the mission of this company is an interaction between a machine and a human body to be able to take someone who's disabled and allow them to walk again. And the vision of this is probably, one of the fascinating parts of why this works so well. There was an inventor by the name of Dr. Amit Gopher, who unfortunately, just like can happen to any one of us, became paralyzed in an accident out in everyday life. And his development of the product was really out of personal need for what he saw and what he needed to regain a lot of things that he had lost. And, if you think about wheelchairs, they've been around 2,000 years and there hasn't been a lot of change. But once you can walk around and stand, it changes inclusion in social situations. It changes your health situation because many functions of your body improve once you're walking again, bowel and bladder and other things among them. It reduces the number of meds you have to take. So there's a lot of really good effects that come out of using these type of devices. Now, for this product in particular, we're the leading manufacturer of these in the world. We've got 2 products that are actively on the market. The ReWalk exoskeleton was approved in 2014 by the FDA and has been working through really building data. And the Restore device, which you showed in the picture a moment ago, is for stroke patients who want to regain that ability to walk with a normal gait pattern. So those are the fundamental things, and there's several future things that we have that I can answer along the way.
Yeah, I just, it's interesting because it's not as if you have been at this for 5 years or something. You've been at this, I think, like the bulk of your career you've spent in some respects in this kind of technology, right?
Well, I've worked in medical devices my entire career for more than 30 years. This specific technology, I was drawn to it because of the magnitude of impact it has and the mission that it had. I've been at this one for about 10 years. And it was from concept through getting to these final stages of getting this thing paid for so people can really get access to it.
Well, yeah, that's the other question, right? Is like paying for this. First off, like the sheer amount of money it takes to develop and invent and manufacture these devices. And then, of course, the other side is getting it actually, into getting it for patients, in an affordable way. So maybe can you speak a little bit about just like the state of like how much money has this like cost and like where are you on that front?
Sure. Well, the ReWalk device for the paralyzed community, the price varies a little between the VA and some other groups, but it's in the $100,000 range. But it's a product that lasts. Think about it like a car. It will work for 5 or more years. The more you use it, maybe a little less. You use it less than that, maybe a little longer. But the key to this is recognizing the value to the individual, and the science and data we built between randomized trials and other papers supports this product tremendously for both the quality of life and the health impact that it has in them. And the real challenge has been not so much this incredible breakthrough in allowing people to walk again, it's getting the paying system to completely support this. And that's changed a lot. That's been the big activity over the last 5 years and where we've had the real progress in the last 2 years.
Yeah, that was going to be my question, right? Is how do we make it to be affordable for people? I guess I don't know.
I think I'd treat it like a car. You'd like to have a car for $1,000, but in the end, most cars cost a lot more than that when you want one that works really well and lasts and is durable. And this is also a measure of safety. Is hugely important that you have a device that is robust. And if you're crossing a city street, you have no doubt it's going to go all the way across that city street and work perfectly. So those elements are important. I think the real element is here looking at the value of being able to walk again and looking at the economic impact and the effectiveness of walking again. The price for that is actually very much in the line of what you'd see for higher end wheelchairs or what you may see in some types of robotic legs for people that have lost limbs.
So, Larry, do you think these robotic exoskeletons will essentially replace prosthetic limbs as we know them, or will there be kind of a space for both?
Well, a bit of a space for both. Now, a prosthetic limb is someone who's lost a limb, and we do have people who are both paralyzed and lost limbs that can walk in these devices, but they're actually two different segments. Generally, this is for the primary product is for spinal cord injury. So this is someone who's lost the ability to walk again. And this allows them to use it in most activities of daily life, whether they're cooking in the kitchen, whether it's social situations, whether they want to go out for a walk with their family, whether they're working, all those activities are still there. Will it completely replace the wheelchair? Not in the short term. The wheelchair has times when it's easier and more appropriate to use. But long term, as these devices become more easily adopted, who knows what the possibilities are. Because we see people running marathons in these things, which is not what we designed it for. But we had a lady finish the New York City Marathon last year before COVID. And we've had about 50 running events done in it. So
that's got to be some good press for y'all.
It was, but the person who completed that marathon, it was force of will. We just gave her a device that this is really a human-machine interface. Her willpower is the reason that machine and her went across the finish line.
Can you talk a little bit just about your production capabilities and how many of these things you actually make or sell in a given year?
Yeah. Well, right now we're selling in the hundreds overall. Most years it's under 100 right now because we're awaiting the reimbursement side. Our ability to produce is quite strong. We believe we'll be in good shape as coverage comes. We manufacture with a third party that is a large medical device manufacturer that works for any of the larger companies of the world, a group called Sanmina. So our ability to scale up and manufacture a high quality product is excellent. The real
focus for last few years, and particularly as we look forward, is getting the coverage completed in both Germany and the United States.
And where are you on that front? That was my next question: is how does this fit into like the FDA framework?
Well, on the FDA side, we have all the clearances. The products are safe and approved. CMS and private insurers, and also I'm going to look to Germany and comment on that a little. But I think there's a quote I would use: "Markets spring into action when economic actors shift the resources." Well, that's finally underway. And I'll start with Germany and then come to the United States. The German government created a code for this a few years ago. And now we have both private insurers and workmen's comp groups almost universally covering it in Germany. There's a current court case that will be decided in the coming weeks or months, very short cycle, that's going to make a determination whether this is a direct compensation for disability or an indirect. A direct one would generally mean that anybody who medically meets the qualifications for this should be a candidate to get a product and would get it covered by their insurance system. So that progress in Germany is leading the world. They take care of that particular community better than any other nation. Now, I'll switch to the United States. The VA was the first group to really endorse this strongly. They did a fabulous job in research based out of the James J. Peters VA in the Bronx, New York. And then there's a large-scale 160-patient randomized study that was put on across the VA. And the VA established a coverage policy. If you're a veteran in the U.S., you can get an exoskeleton today, and it's paid for fully, and you get the benefits. Now,
I was just, oh, go ahead.
Oh, yeah. During the period of the study, they weren't highly active in providing these, but the study was a 4-year study. It is now completed, and those centers, I believe, will become more active as we get past COVID, which has been the other limiter, as many of those centers were not open for training and use of these devices over the past couple of years.
I was just smiling because you said the VA did a great job, which is not something you hear a lot. I can say that my mom worked at the VA, and
I was gonna say, where did that come from?
But is there, it ties into my follow-up question. Just, is there any talk for more like expanded contracts from the Department of Defense or Veterans Affairs, anything like that?
Well, what the VA needs to do is make it more accessible. Now that they've created the policy, and they've done a very good job with the establishment of data through the clinical trial. For many of the patients, there's not that many centers they can go and get this. There's a program they have called the Choice Program, for example, which they've used a little bit, and we actually see them actively doing a patient in there right now as we're getting to the other side of COVID, where you could train right near where you live, as opposed to having to go into one of these smaller number of designated centers. So we're working with the VA, but from a research end, they chose to lead the world here on pure research and understanding of the value of this to their veterans, and have done a good job. On the second half of this, getting it to the veterans, all of the ones who want it, that's something we're really working with them now to try to improve.
Got it.
Yeah, we're on with Larry Jasinski. He's the CEO of ReWalk Robotics, ticker RWLK. Larry, explain exactly again, like how these work. So if I needed this, needed the exoskeleton, is it, I wear it, I put it on when I want to stand up, and then does it need to be charged, or how exactly does it work?
Yeah, I'll describe it in really broad detail. First, it is a suit that you get out of your wheelchair, you lift yourself up and set yourself down into it, and you're sitting with it on the essentially outside of your legs. You saw it in one of the pictures. It works at 6 joints. There's something that lifts the ankles, the knees, and the hips. And around the back, there's a waist pack, which has the batteries and the computer. When the person wants to walk, as simply as I'm sitting in this chair, they will use a little wrist controller and say, I want to stand up. Nothing happens until they move. There's a tilt sensor that basically tells them to go stand up. When they want to walk, the same thing. They'll set it on walking, and when they want to walk, they'll move their upper body or some part of their body enough, the device will walk and stop when they tell it to. So it's a human-machine interface. In order to get one of these, really, they're important medical criteria: bone density and overall general health of your body, to be able to make sure you can use it safely. And then there's a training cycle, and the training cycle runs anywhere from 15 to 30 sessions for a person to learn to use this safely. You got to think of, you have to deal with anything from curb cutouts to getting on elevators to carpet, grass, dirt. So you have to be ready for any kind of situation. So there's a good training component. But that's the path for most computers.
Yeah, it makes sense. And then, just the last point I have here, I'm sure, as the CEO, you can't ignore, as much as you probably would like to, your stock price. What is just your take, your interpretation on just the performance of that, and if you have any explanation as to why you think it's gone down the way it has this year?
Well, the stock price of the company, I think, is very much tied to what our next set of results are going to be. I'm not sure the group's looking as far forward as they should, on particularly with our recent results. But what should investors really be looking at? There's still a very large unmet need, not only for the spinal cord injury product, but also for our stroke products, which we haven't talked a lot about, and they are very unique as soft exoskeleton suits that can affect a much larger community. But the technology itself, we've got some additional new devices that will come out in the ReWalk in 2022. We have a product called the Reboot, which I'd characterize as what it sounds, Reboot. You literally can put it on with one hand, push a button, it will go on and will help a stroke patient progress in their walking and get better. And that has a breakthrough designation with the FDA we received here in September, so that will come to market. But then look at where we've gone financially. For the 9 months entering September 30th, our sales are up 49%. We have 84 pending cases, and the price point roughly of $100,000. Our quarterly losses are down to about 2.7 in Q3. Our margins are up to 58%. We ended the year with $91.2 million in cash, and our cash use in 2020 was about $12.5 million. It will be less in 2021. We've got a team in place to execute when we gain some of these insurance decisions. And we're also looking at external possibilities with the cash that we have. So we're in a particularly good position compared to anywhere we've been. And we think the market will react as a few of the big milestones, the German court case, some activity with CMS is public as opposed to the internal discussions we're having. And they see some people in the Medicare population and others being able to use these at home. Those milestones, we believe, will affect the stock price going forward.
Couple of questions here from our chat, Larry, just about like what other associations do you have with other medical programs? Question about Medicaid, Medicare as well. Can you speak a little bit about that?
Well, the most important component with Medicare and Medicaid was we applied for and successfully got a new code established for the product category exoskeletons. And one of the challenges of being the first and leader of an industry is you have to create things. So there is a K1007, it's a code, a HCPCS code for payment for exoskeletons. Now that is the first step in the pathway of getting these things covered. So we are now interacting with CMS to work through the system to establish pricing and coding. And the reason CMS is so important, at about the 5-year point, 56% of all people that have spinal cord injuries wind up in the Medicare Medicaid system.
Yeah.
It's a large group. And secondarily, the private payers pay attention. What Medicare is covering, they will typically also look at very closely. So that step of getting a code created was very, very important, both from the vision of what CMS had to create a code specifically for this, and for the level of interaction we've been having with them that we'll be able to show more publicly as things develop.
What about joint ventures? Are there any that you have, or is that on the table?
Most of our work has been on the development side. We have a partnership with Harvard University where the soft suits, which are the wearable suits that you can wear on one leg, 1 foot, one appendage. So that is a very important development tool for us. The Reboot technology I referenced a moment ago came out of the Harvard labs. So on the development side, we've done those. Relative to other things, we are in a very good cash position. We have a good distribution and reimbursement system structure in place. So we could and will consider some other things we could do to broaden our portfolio and to get to profitability at an earlier stage.
Larry Jasinski is the CEO of ReWalk Robotics. Larry, I say this as someone whose sister uses a wheelchair, but I'm rooting very, very hard for you and your company, and thank you for dedicating your career to this. And I genuinely, I don't say this about companies because frankly, I don't really usually I frankly don't really care, one or the other. But like in this case, I am rooting for you, seriously, genuinely, and I wish you the best in your development of. Well, you've already got them. The development and the production of these suits, and thank you, I guess, and I guess I hope more people can get them in their hands.
Well, stay tuned to the developments this year. If the German government stays on path and we make progress with CMS, those people that really want to walk again are going to have an option. And on the stroke side, you're going to see a new product that progresses that could really help a lot of people regain a better form of walking and increase their speed and distance. That's what the mission started with this company, where Dr. Gopher really hoped we would land. And it's exactly where we're going. And I think the investment community will see that with the successes we expect in 2022.
Awesome. Larry, thanks a lot for coming on Benzinga Live today.
Thanks, gentlemen. I appreciate your time.
All right.
Have a great rest of your day.
That was a feel-good interview. I feel better about the future of society.
Yeah, I mean,
after that one,
a lot of times we get companies on that maybe they're just trying to make a buck. It's nice to get a company on that's attacking a real problem out there. I wanted to ask, but I refrained myself from because what they're doing is uncertainly cool, but not necessarily like really fun. I was thinking more on the fun side, like. Will I be able to one day put on an exoskeleton that will allow me to dunk a basketball?
You're talking like Iron Man 2, right? Where he's got the bad guy had like, oh no, that wasn't Iron Man 2. No, like Iron Man. You're talking about like Iron Man, basically.
Basically, but I don't need to fly and like shoot people. I just want to be able to dunk a basketball.
I mean, they have shoes for that. They're called PF Flyers.
Really?
Yeah. You should look into that.
I'll look into those.
All right. It's 12:51. We're going to have our next guest on in a few minutes, Jesse Kaylor. We're going to talk trading. In the meantime, see, Born to Be Free says he never thought he would live to see something like that, and I'm still young. That's exactly right, man. Not every company is, out to save the world or change the world, but this one is. So, the stock obviously has been a downer, but. We can't speak to that or the future of the company or the future of the stock. But we generally, it's something to be said for actually doing something to move society forward and to help people, and that's what ReWalk is doing. So, props to them for that. So, let's do a name that chart segment, Aaron.
Let's do it.
What say you about that?
I say let's do it.
Okay.
We haven't given out any swag in a few days, so it is time. Now is your chance to win some free Benzinga swag.
All right, so
I don't know if Alyssa Cole is still in the chat, but we are working on something very exciting, Spencer. Do you want to know what that is? I'll give you a tease.
Yeah, you can definitely tell me what that is while I get rid of all the symbol indicators so that we don't have them up on the screen. Yes, tell me.
We are working on our very own Benzinga Christmas sweaters.
What?
Holiday sweaters, Christmas holiday. And then if your next question is, are they going to be good looking?
The answer is no.
No, they're going to be ugly.
I like it.
They're going to be ugly sweaters. And also maybe a beanie or two just for me. My ears get really cold in the winter and I need to have a little beanie, but I want one that says Benzinga on it.
All right, I'm trying to get this chart to zoom in so you can see. I think I got it. Okay. All right, I think I have our chart here. And I think I get the zooming right? So I don't have anything that gives it away on the screen.
Tiny Pie, come on, man. There's supply chain issues out there.
Tiny Pie, listen. As Aaron just said, there are supply chain issues in the world. Okay, I can't get, my store can't even get milk. We have higher priorities than your shirt. No, your shirt's coming. Anything that we send you guys, we're up to date, right, on all of our shipments.
I gotta send a few.
All right, I take that back.
Tiny Pie here. I'm gonna message you.
Shelly, your shirt's on the way. I don't know if you've gotten it yet. We sent out a shipment before Thanksgiving, didn't we?
Yep.
Yeah.
I actually I sent a buddy a piece of swag, and it actually went pretty quickly. Maybe he lived near one of the shipment centers. I don't really know.
I don't know. All I know is I made an Amazon purchase on Monday, and This that I'll be getting it tomorrow, which is cool. But okay, chart of the day. Let's bring it up on the screen right now. Speaking of inflation or supply chain problems, this is, as you can see, I got rid of the y-axis. I can bring it up. Have no fear. We'll just leave it up with no y-axis for the moment. But this is a consumer products company. Here, consumer products company theoretically would be affected by both inflation and supply chain problems. Not necessarily in a bad way. Here is your y-axis. There we go. 147.58 was your last trade in this stock. It is not Target Matty Ice. It is not Walmart and Cal. You're not that far off. Shelly's not in your warehouse yet. Shelly, all I can say is it's on the way. Name this ticker. First person to name the ticker gets some free swag. Apple is a good guess, but no. Stop guessing Walmart, people. It's not Walmart. Nordstrom, you're not quite. It's consumer products, right? It's shoot. We do have a winner. Okay, you know what? Tie. That was a tie. Tie goes to the person who didn't already win. So Shelly, you won this like 2 weeks ago. Tie goes not to you. Tie goes to AP. Stands for Advanced Placement. AP guessed Procter and Gamble. And you are correct, AP. Shout out to you. Everyone claps around for AP for getting that one right first, or at least tied with Shelly. Shelly, you literally won this like 2 weeks ago. Okay? Also, I'm not convinced you're not cheating. But
how would she be? I don't know. Is there a way to cheat?
I don't know how you cheat.
Yeah.
This is a daily chart in Procter and Gamble. Congratulations, AP. AP, whomever you are, shoot us an email. We'll put it up on the screen. shows@Benzinga. Where's the email? There it is. shows@benzinga.com. Email us. And eventually, you will get some free swag. I can't promise when. Supply chain's all screwy. Hopefully before the end of the year. That would be ideal, right? We do send shipments out, like once a week?
Yep.
Every other week?
Yep.
Right? So, AP, A space P. Send us that email.
Yeah, Shelly, you get a nice high five from the Benzinga team. Boom.
Nice one. Shelly and AP were tied. Tie goes to the person who didn't win last time we did this. So, congrats, everyone. Thanks for playing. We're going to do that segment once a week going forward on Wednesdays. Name that chart. Speaking of recurring segments, we're trying to fill the show up with recurring segments. So tomorrow on the show, we're doing trivia, but we're trying to brainstorm a theme. If you have an idea for a theme for tomorrow's trivia, drop the idea in chat. Last week was Thanksgiving. The week before, I think, was Tesla. I think.
No.
I think it was Tesla.
Nope.
It wasn't? Okay.
Nope. Tesla was 2 times ago.
Okay. Drop your ideas for tomorrow's trivia theme in the chat, and maybe we'll just use your idea, because we don't have a theme yet.
The last theme was Thanksgiving theme.
Yeah, no, the one before that
was Tesla.
That's what I said.
Oh, I thought you said the last one was Tesla.
Tiny Pie says Okay, maybe we should specify like markets or businessy related. Usually. Die Hard movies, crypto trivia, Disney.
Let's take a look at Disney.
I'm a Disney encyclopedia. I know a lot of Disney trivia.
Wow, Disney's all the way down to 145.
Dude, Aaron, don't even get me here. It's pull up a chart. Don't even get me started.
I did not know it. I did not realize it got that low.
Dude, I know.
It looks like it's got some ways to go too.
So like Disney, this has pissed me off because like sometimes I would almost rather let's get a watermark back up. Let's fix my charts. Sometimes I would almost rather my stock not go bananas, not go to the moon, because what happens when the moon
Oh, that's a good idea, Christian Gallagher. We'll do Ford or Detroit motor trivia.
Yeah, that's a good idea.
I will not do well on it. I don't know.
Me neither. But hold on. So Disney was priced for Disney Plus, right? Disney Plus was the only thing that Wall Street cared about basically all of last year. That doesn't, I mean, and when I say all of last year, I mean after COVID hit, obviously. That doesn't really make any sense to me, right? Disney Plus is obviously a growing part of the business, but it's still a smart part of the business. Now that the market has decided that Disney Plus, well, no, the market hasn't decided that, but Disney Plus growth is slowing, at least compared to last year. Duh. It's a streaming platform. What else do you expect? People aren't stuck home anymore. The market's like, oh, you know, we're over you. You have nothing. You have nothing for us. If you have Disney Plus, if you don't have Disney Plus, you have nothing. No, that's not true. These guys are the kings of content. They have so much more stuff. They have parks, experiences, resorts, cruises. Not to mention all the movies, right? All the IP they own. It's not just a Disney, but Wall Street only cares about Disney Plus for some reason. I don't get it. I'm a little bit annoyed. You know, I'm long from. I don't even know where my cost base is. I've bought this thing like 3 times, so I have no idea my true cost base is on this stock. Probably somewhere around 120, 30. I have no clue. But I'm pissed off. You know, this is in my never sell portfolio, so I don't look at it, but I'm still pissed off here because, like, I wish the market would understand that there's more to Disney than just Disney Plus, but that's what they've hung their hat on, and I guess the stock will go how Disney Plus goes for now, until they have a new sexy thing like the metaverse.
Yeah, I mean, look, don't you know, if the metaverse takes off and it's the next big thing, we can't expect Disney to miss out on it.
Look at that comment. I love that comment. Plant the Cyclist. As long as we still have babies and children, there will be a need for Disney. Boom. It's a demographics play. It is a demographics play. It's a play on young kids. You know, it's a play on newborns needing iPads to occupy their time. It's a play on young families. That's what this is. I love it. I've not thought about it like that before, but I definitely dig it. Plant the Cyclist. Okay. Number 47. How can a new day trader optimize money that is not being currently used in the trades?
That is a good question.
Like if you have cash that you're not using in your account.
Cash is a position.
Cash is a position.
But you're not optimizing.
Cash is an investment.
Money.
Cash is an investment. Right now, cash is losing money for you because we're in an inflationary environment. But cash is an investment in cash, right? In nothing. It's a good question, though. I'm sure we all have our own opinions. I bet you our next guest has thoughts on that question. Jesse Kaylor from Elite Trading. Let's bring him on the show. We'll hang on for a few minutes. Jesse, what's up, man?
Hey, how's it going?
How was your Thanksgiving?
It was good. It was busy. I was hosting for half the day and then got to enjoy some food, the other half with the rest of my family. But
nice.
It was good. It was busy, exciting stuff.
Nice. Did you
take
Friday off by chance?
I did. I took Thursday, obviously off, and then Friday. Barely did anything on even Wednesday. After we talked, I mean, I just kind of just took a long weekend and came back to obviously some exciting trades. I did participate a little bit Friday because it was like the theme was Black Friday sale on stocks, and there was a good time to buy that dip. And I did join in on that Apple trade, which everyone's talked about all day long, and I had a little fun there, just really fast. Honestly, I didn't hold it long enough, and then played some odd trades, some things that were out there that I just saw on the oversold scanners and things of that nature. I'm actually going to pull one of them up here as soon as I can. I was having a hard time getting set up. I had some technical issues when I first started, but I think we're good to go now. So not
DraftKings?
It's not DraftKings. No.
Oh, okay. I was going to say.
Sorry. I couldn't remember. AERC.
AERC. That was a high flyer the other week, wasn't it?
Yeah, so
No.
this thing went like
Okay.
it went like all the way to like $100 or something. Let me see here. And then I saw that it was down like 98%.
Great.
And to
Great.
me, I'm like, anytime you see a stock go down 98%, that's to me just extremely oversold. So I was like, there's got to be some type of bounce. And when I saw it, it was at like 19. And then it went all the way down to 15, and I was just buying it all the way down to 15, and then it just popped all the way back up to 22s, and I got out. But it was just a crazy trading stock. If you see this, it just came all the way down.
Yeah,
and it just flew back. That was that bounce, and I was just.
But how did you know that? I guess was going to happen.
So, just experience, I guess, of trading that you I could have been wrong. I mean, it could have continued to go down, but I went in slowly. I just was, as it was coming here, I waited for the first green candle. And when I saw that they was starting to find some type of bottom, I started buying in this area right here as it was coming down and coming down and coming down. And then when it popped, I sold right in this area here. So it was like 22.50, I believe. So to me, it was just more of, I took a gamble on a stock that was, I mean, in my mind, I had 2% to lose.
Yeah.
If the stock.
I love that. I love that. You know what you're willing to lose before you go in.
Yeah. I mean, I'm always looking for what I'm willing to lose. And on this one, it could have been a lot, but at the same time, there was so much reward hanging above the risk that it just made sense to get in and at least try on this one, just because you don't see a lot of stocks get hammered that bad, that fast. 98%. And then I think it settled at like a 75% loss for the day. So, there was 20% in opportunity on $100 stock. And
nice. Okay.
But
all right. Good play, man. Good play.
It was fun. Lost
what else
a
we
little
got?
bit on AMD. I just
yesterday?
Just mistraded it. Yeah. Between yesterday and today, just mistraded and held on too long when should have got out. And now it's finding this area of support at 154.50, 154.40, like if you see back there. So I mean, look at it right now. You've got a lot of ways to fall if it tries to fill this all the way down to back down to this 147. So I think people might actually take a shot at it right here. Maybe if the end of the day, if it hangs out in this area, but we'll see. I'm staying away from it. But
from AMD.
Yeah, sometimes if for me, mentally wise, I try to sometimes take away from the chart, like get away from the charts, get away from anything that looks right or feels right. If I'm having a bad day trading, or if I'm trading like a stock, not having good trades on it, I'll just stay away from it, period. Just because it's just one of those things fair. That, I think everyone has a stock in their portfolio, or at least a few that they've traded in the past. And every time they look at it, they just have that, you're like, man, I just don't trade this one that well. Doesn't work for me.
Totally fair. Hey, here's one I have not looked at for quite some time. Can you zoom out? Can I just get a feel for the longer term trend on Dave & Buster's? I haven't looked at it in I don't know, months. Oh, okay. Huh. What I wonder what happened there. I don't know when that. That was never mind. Oh, this is a 2-year chart. Got it. Okay. Yeah, okay. Tell us what you're seeing here. That's an interesting channel, and we kind of broke through it.
Yeah, I think that this is a healthy pullback for the run that it had. This is a weekly chart, so you're just looking at pretty much nobody had any issues this whole way up, and then you get some profit taking, and now we're getting a 50% retracement on that move. It looks like on a weekly chart. So if you come down to at least try to see what it's doing right now, it's breaking that trend and actually looks like it would be probably for some people looking like it's going to the downside. So you'd want to see it hold this area right now. It seems like a lot of stocks are doing the same thing, where they had a run and then they're pulling back to some previous support levels, and now it's make or break in the market. I think that you said earlier, if I'm not mistaken, that you were a little worried and you weren't too convinced that this pullback was when it bounced back so fast that it was going to continue, right? And if you did say that, I kind of agree with you. I think that we have some more pain to come in the future when it comes to that pullback that we just had. I think that we're going to get
Okay, so here's a question from number 4T7 in the chat. And it's more of a macro rate trading question. So Jesse, I'm assuming you have a trading portfolio.
Yes.
Well, obviously, I'm not assuming that. I know that. And in your portfolio, do you trade 100% of your capital that you've allocated for this, or do you? How do you break it down?
Sometimes. I mean, not every day, but I mean, it just depends on how many trades you take in a day. I feel like most of the time I'll take 2 to 3 trades that are meant to make my profit for the day, if that makes sense. If you have a profit or loss, like I try to make a certain profit on there. And then there is another portfolio that I think most people have multiple portfolios. I have another one that I'll buy I'll buy a long-term call that's naked and just do it as a speculation play. And I'll spend like 25% of that portfolio and not look at it for a while. But, there's one, if you're looking at a 5 to 10 grand day trading portfolio, if that's, most people are starting in that area, I feel like that it's up to you on what your risk is. But at the same time, I think it just depends on what kind of account you have too. If you're doing like, I think AB has a trading account where he can only trade 3 times in a week. So if you're doing a cash account like I do, then with no margin, then you can trade whatever's in your portfolio once your funds are settled for the day. And for me, I like it just because it keeps me honest, keeps me from overbuying or overselling if you're on the other side there. But I like to use my money, what I have in there, and there's no really set amount that I'm going to trade that day. It just depends on what I'm trading, what stock, and what size I'm going with.
Let me put it to you this way. Do you have a maximum amount of money that you're willing, or maximum number of trades you're willing to put on at any one time, or a maximum amount of your portfolio you're willing to have on at any one time? I know, we've talked about controlling your risk, and obviously, having a loss parameter, knowing how much you're willing to lose on every trade. But if you put on all those trades together, do you have any rules for yourself about, like, for example, I'm never going to have more than 90% of my account in the market?
I like to have anywhere between 40 and 55, like 55% in cash sitting there
at all times,
waiting for a real bad day that I can get in and buy more.
Yeah.
So I don't want to be, I would hate to, and it's happened to me where I've used my buying power and then I get in an hour or two later and I'm checking stocks and I'm like, man, I really want to buy here. And I don't have any buying power.
We've all been there. Raise your hand if you've been there. If you want to go on a buying spree on your shopping list and you got nothing left, man.
And then you'll buy it and it says you can, you get those little warnings that are like, hey, you have 2 days, you have to hold this for 2 days. And that's the day that you wake up and the stock's up 45%. You're like, I need to sell. I'm going to take the penalty.
Yeah.
It seems like a lot of times anybody I talk to, they're like, I've got 100% winner, but I can't sell it because of my trade rules. And I'm like, you should have never taken that trade.
Yeah, I've had situations where I've been like, oh crap, okay, clearly I'm much too big in this position. Let's just trim that right now, free up some cash, and buy what I want to buy today. I've done that. I've done that before. But and here's how I approach it: is I like to keep. This is not for my trading. My trading portfolio is very small. But for my longer term, my main taxable account, right, on Fidelity, what I'll do is I'll in an ideal world, keep 10% in cash always, maybe a little bit less, 8%. I've definitely had less than 8% cash at certain times, and I've had more than 8% cash at certain times. But my general rule for myself is try to keep between 8 to 10% in cash at all times. Like Jesse said, on the days where you really want to go shopping, and also because cash is an asset, and you want to have some free capital.
We might have a visitor coming in.
Generally, you get awesome. We love visitors on the show. James, there's a bunch of tickers. Let me catch up on the chat here. Hold on. What are you guys talking about?
I'm going to mute myself. I'll be right back.
All right. We just lost Jesse, and AB also had to step away. He'll be back, though. So let me catch up on the chat. Do you use margin is a good question. Yeah, having cash frees you up to use margin, obviously. So that's another benefit of using of having cash, right? Gives you some flexibility on the margin side. Okay, wait. You guys talking about the market here, so let's pull up the overall market and let's get rid of Jesse's chart on the screen. Let's pull up my chart. Okay, we got the SPY 15-minute, bada bing, bada boom. Yeah, whoa. Hey, you guys want to hear a fun fact? Mr. Joel Elconin is currently in the office right now. He's in a meeting. I don't want to bother him. But if he was not in the meeting, I would 100% yell his name and have him come over here and have him panic with us. Because we just made a new low of the day in that last 15-minute bar in the SPY. How are the Qs doing? Same story? Same story. Russell, what do you got for me? Same story. All right. New lows of the day across the board. No one's speaking, right? No one's saying anything. It's just I don't know. Intraday nervousness. Janet Yellen is talking? Oh, I didn't know that.
What's she saying?
I don't even know. I'm on with
Is she
you.
saying good stuff or bad stuff?
I don't know. I have absolutely no idea.
Hold on. Here's how you know. Let's check SPY.
Here. Let's go to the pro news feed. What do we got here? Search for SPY.
SPY is going to go to 461.
Biden just said that Omicron is a cause for concern. Yeah, duh. I could have told you. We all could have told you that. Okay. Oh, Biden speaking? No, the market doesn't usually react to what Biden says. No. Okay.
Who's
anyway,
Biden? I'm just kidding.
President Biden. Yeah.
I'm just kidding. He said President Biden.
President Biden. That Biden.
That guy.
Anyway, so new low of the day in the SPY. But hey, let's keep things in perspective, people. Let's keep things in perspective. Let's go to the left forever. Go to the left forever. Okay? I hate the people that look at charts like this and say, oh, this won't end well. Why the hell not? Screw you, this won't end well. Markets go up more than they go down. Okay? I'm not saying we can't go down. Of course we can go down. We should go down probably. It's healthy to go down every so often. But don't think we have to go down just because we're at or near an all-time high. Come on now. That's just silly.
And those of you that are new to trading, if you're out there buying options, in my opinion, you're silly to think that this thing is going to fall to I was seeing someone say, oh, it's going to go down to 350. And I'm like, if you get a $5 to $10 pullback in SPY, that's a good pullback as of late. I mean, if you get any type of pullback for a few bucks. So people saying $100, $150 pullback, that something big would have to happen. Something bad.
What? Come on now. Let me get some moving averages up on the screen just because I like looking at moving averages. And we got the 50-day. We got the 200-day. Okay, there we go. That's better.
Have you traded or looked at SPY-G at all?
I got to admit, that's a new one for me. The SPY
Series
growth.
Trust Spider Portfolio growth.
SPY growth. Oh, crap. Come on now. There we go. SPY growth.
Doesn't it look a lot like SPY?
Yeah. Oh, come on. Let's look at this correlation here. The SPY-G. And hey, not what I meant to do. While we're at it.
Everybody hit that like.
While we're at it, we're looking at SPY-G. We're looking at SPY. And is there a SPY-V? Yes, there is. SPY growth, SPY value. Let's go year to date. Okay, shocker. Growth has outperformed. I don't know what's in SPY-G. I'm just guessing off the top of my head. It's probably the FANG stocks. Facebook, right. Amazon, Apple, Netflix, Google, Microsoft. If I had to guess.
But it's a lot cheaper than the other one. So if anyone's looking at one, it's just one that I been watching.
SPY looks like it's hovering around its 50-day. Is that what I'm seeing? Yes, I think it is. Let's go to SPY. Yeah, we didn't quite get there yesterday. That's okay. All right. Anyway, okay, Jesse, what else? What other tickers are you looking at here?
I bought yesterday and sold it because I've traded this one a lot. It's LPI and
LPI. I don't know this one at all.
Petroleum. And it came right back into this area right here where you see that it came into 55 and it just immediately bounced and just shot up. And I just got out because it was such a quick move. But then today I was watching it again. It's coming back down and testing that same area. And I think it's going to break down a little further. So I'm out of this one now. But just watching a lot of the anything to do with crude or, watching Gush, which is another one that a lot of people like to trade. Oxy, just watching this pullback.
How long would you typically hold a Gush?
Sometimes minutes.
Okay. No, well, I meant okay.
I don't really hold a lot of things very long.
Okay. Okay.
I'm looking for instant gratification.
Nice.
And sleep better at night by having everything settled and not waiting to wake up in the morning. Now I've missed out on a lot of money because I don't hold a lot of stuff overnight, but long-term wise, I think a lot of members that are in my group, they'll ask me like, hey, what are you buying long-term? And I'm like, what's long-term? If I make 25% on my money in a couple of days, I might just sell it. So that's that. And it could have been a long-term play, but I like to take the profit when I see it. I have a problem. I sell too early a lot. It happens a lot, but that's just the way that I actually do. That's just the way that I buy and sell. It's just sometimes it just happens. So I want it to happen fast. I mean, I wish I could make 100% on every trade in 5 minutes, but 5 to 10, 20%, you could, no matter how long it takes, that's quick money. But something like these, they're all trades.
If you have any tickers in the chat you would like Jesse's take on, drop it in there, and we'll take a look. He joins us every Wednesday for a half hour to hang out.
Ford's doing a healthy pullback.
Ford, I'm also watching because Friday they're presenting at a couple EV conferences. We talked about 19 being important this morning. Obviously, it's still there now. So, Ford is an interesting one. It was such a slow mover, such a dog, and then all of a sudden it goes from like freaking 10 to 20 on you, and then that's not normal for Ford. So let's see what they say around their EV roadmap on Friday. But 19 is critical, is what Joel said.
Yeah, I had some call options for January year out, and I really wish I would have held them a lot longer than I did.
Hey, I was long until 13.
Yeah.
Whoa.
What just happened?
No, yeah, I'm catching up on the chat. So James is watching ARKK. Oh boy, this is making me afraid to look.
Break 100.
All right, ARKK, and I've got the ARKW. All right, so let's start playing some catch up here. So what do we got here? How's Tesla doing? No, it's fine. Tesla's not the problem. I got to go pull up the largest holdings in ARKK because I don't know them off the top of my head. Okay, we got
PayPal, PYPL. Let's see.
Okay, Coinbase, Teladoc, Roku, Zoom. Let's take a look. See here. Coinbase. These are all the top holdings in ARKK. Coinbase. Yep. Leaking. Teladoc. Oh gosh, Teladoc's below 100. Oh man, Teladoc below 100. This thing. How much was this thing earlier in the year? This thing was $300 in February. It's below 100 now. Roku. How's Roku doing today? Roku is down 5. Wow, that Roku chart looks horrible. Horrible. Look at that. That's disgusting. I've got a Roku. I love Roku. I wanted to buy Roku years ago, and I never.
Right behind this laptop.
I wanted to buy Roku like 3 years ago, and I didn't do it, and I regretted it.
They're not bad.
Holy cow!
They're compatible with everything. My wife's Apple TV, all that stuff.
Wow, Dude, this is
Not
such
everybody's.
a
I
weird...
guess everyone's not out buying their $400 TVs at Walmart right now. So here's one that kind of goes. I can go in. This is my love trade for the day that I had was BBW. I love this one. I've been talking about them for so long. And when I was at Kings Island, which is, I don't know if you know what that is, but it's one of our, it's like a big theme park in Ohio.
Yep.
But, they have Build-A-Bear workshops there, and they were open and full of people every time we were there. And then I go to the mall to go shopping with my family for Christmas, and BBW is the only, Build-A-Bear workshop was like the only store besides a children's place, is another children's clothing store that we on one. There's a double floor, big mall, popular mall, used to be booming, and almost every store was gone. And there's bright and shiny Build-A-Bear. Kids ran right up to it, and I'm like, maybe they're winning because there's just nowhere else to shop in there.
That's so interesting. You had that experience. Mine was the exact opposite. I was at the mall on Friday, a very busy mall in New Jersey, and the Build-A-Bear was a ghost town. It was one of the only store. It was one of the only stores where like there was just nothing happening. Interesting,
That's
right?
crazy.
Interesting.
You were just there. Maybe it was just a bad time.
Could have been. I don't know.
You were there during school. Kids were in school.
No. Well, I don't know. Maybe you're right. Friday.
But look at that chart today.
Yeah. Throw this into the category of the Crocs too, which is like stocks you wouldn't have thought would still be around. Crocs and Build-A-Bear. And not only are they still around, they're booming.
Well, didn't some rap artists and celebrities start getting their own branded styles of Crocs? Like they started becoming a trend.
Yeah.
Yeah. And for me, does that mean that a lot of them are investing as well? I mean, if they're rocking the Crocs, are they rocking the stock of Croc? I don't
know.
And that's a lot of money. That's a lot of money out there that could be going in if they're buying into it. So I mean, I don't know if it's moving the stock that much, but you never know.
Apparently, some people in our chat are local to New Jersey. What's up? James says he used to live in central New Jersey, right by where I grew up, and then Planet Cyclist is born and raised in AC. That must have been interesting.
I see some people saying Dayton, Ohio. That's 30 minutes north of me, and a lot of people here looks like says I'm a Natty kid. Cincinnati. I grew up downtown.
Oh, I was wondering what that meant.
Yeah, I grew up in Cincinnati, So
got it. Anyway,
Bengals baby beat the Steelers. Pittsburgh went down in the house on Sunday. So
I'm keeping an eye on just my Benzinga Pro scanner, just looking at what's happening here in the last few minutes. Tech is obvious. I mean, the whole market has been leaking here, but if you go to look at how Salesforce doing right now, that's what I want to know. Salesforce was sort of your outlier of the morning. The earnings were fine, but not amazing, and the stock was down pre-market, and it really has been leaking all day here. So just made a new low. Just bounced.
So CRM is another one I pair with that is Twilio. Look at that, it's dropping as well.
Christian, I agree, man. NJ gets no respect. No respect.
New Jersey.
Yeah.
Well, I think of that show, The Jersey Shore.
Yeah, that's what everyone thinks of.
I know, I hate that.
Justin, I am from a small village called East Brunswick. Is where I'm from. Okay.
I've heard of that from some type of show or movie.
No, I don't know. Okay, just keeping an eye on Salesforce, keeping an eye on Twitter, keeping an eye on the payments. Hey, how are the payments doing today? They got punished last few weeks. Let's pull up Visa. Oh, it's down. Well, the whole market's down, so it's not a great. Wow, this Visa is at a very interesting area here. Let me pull up my chart. This Visa is looking like it is at this support. How much support? Look at how much support you got here, Visa. Okay, look at this. Wow. 1, 2, 3 days in the last couple of weeks. But then go back to January. You've got support here. You got support here from October of last year. Wow. And, July of last year, too. Okay. Is this 192? Is that what this is? Or 189?
So you saw the 180 puts and
Let's just call it 192. Let's call it 192. You fall below 192, ruh-roh.
150.
Sure, I could see that.
But God, this thing is just hated right now.
And it's Visa. I saw a thing today. Credit card applications are at an all-time high right now. I just got a new credit card for the first time in 4 years.
I wonder what the average credit score rating is, if it's increasing for the average consumer. Like if credit scores are getting better.
Well, more credit is good for your credit score, right? So.
Well, what I'm thinking is are they losing money? And because I know that a lot of these banks and a lot of these companies get most of their money from fees and people actually not paying their bills.
Yeah.
So if people are increasing their credit, paying their bills, and actually not giving them the fees that they once were making, are they losing money because of lack of fee collection?
That could be. I mean, Mastercard is in fisticuffs with Amazon right now over their fees and over in the UK. But yeah, I mean that's always been the case, right? The people that are not paying their bill every month, they subsidize all the perks, all the benefits, all the free miles, all the rewards, right? All the cash back you get. I was having a long conversation with my family over the weekend about that, because my uncle was like, my uncle and my dad are like hardcore, like credit card. I don't know what the term, like skimmers or whatever. They milk the system for all the rewards they can get. Which is, hey, if the companies offer it, right? But it's the people not paying that subsidize all that. So it's a great question, Jesse.
They're the ones that are going into your family's the ones going in and asking the dealership to let them buy the car on the credit card so they get all the miles.
No, wait. Can I tell you about this arbitrage that my uncle is doing? This is pretty crazy stuff. This is the minutia of my family. So my uncle, what he'll do is, and by the way, this is not a very profitable scam. I'm just saying. What he'll do is he'll go to the store and he'll buy a gift card for a gas station. Okay? Exxon, whatever, BP. He'll pay for the gift card with a credit card. Okay? He will then take said gift card, whatever's on it, and when he goes to fill up his tank, he will pay for the gas with the gift card. Now, a gift card counts as cash. It does not count as credit in terms of like the form of payment, right?
Right.
So that's cheaper. That's actually a little bit cheaper, paying cash versus paying credit for gas. And so that's an arbitrage he does. He will acquire a gift card via credit and then pay for the actual gas with cash. He does that.
Makes sense.
He does it every single time. And I don't know what he saves. He saves like a couple bucks each time he does that, but a couple bucks times 50 times a year, he does a lot of driving.
Yeah, so, I'm sure that there's certain times of the year where there's like a perk, like, hey, if you buy $100 gift card at Kroger's or your local grocery store, then they'll give you, a certain amount of points for gas. So you're getting like 30, 40 cents off of gas. Right.
So you're getting that, and then you're also getting the lower price for gas at the pump. Now, who's being screwed here? Who's being screwed is the gasolino, is the guy who owns the gas station. That sucks for him, frankly. He's the guy that's getting.
I think they make pennies off of gas anyway, from what I hear. They make all their money off of the merchandise in the store.
Right. Well, okay. I don't know that, but that could be true. In any case, this is a thing.
Don't buy sunglasses. I'm telling you, I have a friend. I'm ratting you out, Rocky, but he owns a distribution company. They have like 300% markup on all those little novelty items. You pay $8 to $10 or $20 for glasses. They're like $1.50 to the owner, and it's crazy. I had no idea how cheap all the little knick-knack things at your convenience stores are.
Wait, Proton does the same thing with Red Lobster. Buys a Red Lobster gift card for the cash back, and then pays for his meal with that. Yeah, this is a thing. Great. I'm glad that people are making use of the system.
Yeah, because
I think the gas thing is a little bit silly unless it's only worth it if you do a lot of driving like my uncle does. But hey, the arbitrage is there. You want to save a couple bucks every time you fill up your tank? There you go. Buy a gift card.
you save $1 a gallon on my truck. I mean, I'm saving $60 at the pump. I feel like it's
there you go. There you go. All right, it is 1:34. We've been on with Jesse Kaylor from Elite Trading, joins the show every single Wednesday. If you want to join our show at any point in the week, come email us, shows@benzinga.com. And Jesse, I'll talk to you later. Have a great rest of your day, all right?
Next week, yep.
All right, special guest now. There he is. He just walked across the screen. Joel Elconin.
You did this.
I did not. Rohan, can you zoom out, please? Rohan, are you even at your computer? There he is. Oh! Put the headphones on.
Oh, my God. This is... Wow.
Look at this. Look at this, everyone. Surprise guest today. Let's see how long it takes to figure out. What's up, Joel?
Hey, good afternoon.
You got a microphone there.
Oh, my God. This is... Aaron, you got a big head, man. I didn't like fit this.
Joel.
Look at this. Holy mackerel.
What's up?
What's going on in the market?
Not good. We're just talking about Visa, but yeah, here you wanna take a look, see? Yeah.
Oh, we're still way up.
Nah.
We came off the high.
Here, I should probably show you what I'm showing Joel.
Can I get some real quotes here?
You want some real quotes? Yeah, on your phone. Yeah.
I just have to do it on my phone.
That's fair.
I should have brought my computer. I'll get some real quotes.
That's okay. Yeah.
Oh, we're doing okay. We're still green on the session. We're up 37 handles.
You hear that, everyone? We're doing okay. Everyone chill. Everybody relax. We're doing okay, Joel says. What's up?
This is a nice setup here.
Joel looks so young right now.
I do.
Who's the new guy? That's a great question, Tiny Pie. I don't know. Joel is in the office. Yes, this is the first time that Joel and I have been in the office at the same time since before COVID. It's true.
February. What was the date? We marked.
It was March.
I stopped coming.
Oh, you did because of Lisa. Yeah, February 20 something.
Yeah.
Yeah.
I think so. I think it was February 25th. I believe it was a Friday.
What do you think of the new digs?
Man, oh man! I mean. I know you put this up here because I was coming.
Yeah, it is. No, this is up every day.
Oh, really?
This is up. Well, actually, I should not say that. It's been up all week. How about that?
This actually looks like a real studio.
You hear that, guys? We are gone. Are the days where we do all this stuff from our desk, right?
Yeah, and you're not over there. Well, you're over there in the morning, right?
Yeah, because I need more information for pre-market prep. It's information. I've got my laptop here, and that's all I got.
I kind of feel like naked.
Yeah,
up.
I hear you.
It's
an adjustment. It's an adjustment to not have 4 screens in front of you at all times.
Could you hang some screens up here for me, and then so I could click my mouse and look up at the screens?
Rohan, did you hear that? Can we hang screens from the ceiling? Rohan's producing from home today.
It's certainly possible.
Okay, let's talk about the possibilities of that. Yeah, Joel, and wait, can you show Joel the overhead view as well?
Yeah, one second.
Okay, thank you. Take a look-see. Right over there, you're gonna. Oh, look at that! You see that camera up there?
Oh, which one?
On the ceiling.
Oh my gosh! Jason let you guys
look.
Jason let you guys spend all this money. What's going on?
He wasn't here. Shh.
I don't like this chair, but whatever.
Jason wasn't here. That's the trick.
Look at this. This looks so good.
Look, you got the rink and the campus marches in the background. You got the TVs. You got the TV. You got people.
There's one thing I can't do. I know you guys think I could do everything.
Yeah.
I can't ice skate.
Oh, really?
Nope.
We're actually going to do a segment of the show live from the rink. We haven't figured out quite how yet, but we're going to do it. AB and I can get out there and
I can not rollerblade because there's only a couple, but roller skate. I can definitely roller skate. So who's out there? Who we got watching us this afternoon?
We got some people, some familiar names in chat. We got Richard Judge. We got Born to Be Free. We got Jack Douglas, James, number 47. Welcome to the chat, number 47. Planted Cyclist, I've seen you around before. Patrick Starr, what's up, man? Christian Gallagher, Travis Martin. A few of you have some outstanding swag.
Do we have any bots out there?
If you're a bot, press 1. Anthony, are you a bot? Press 1. Yeah, no, we got a few hundred people right now, and then we're gonna have the roadmap in 20 minutes, talk NFTs and crypto and all that jazz. But this is our midday digs, Joel.
It looks great. I mean, I have to
you were here. You were here on Thursday, correct?
For
the parade, or no? You weren't.
I didn't come for the parade. I was here
on Sunday.
Lighting the menorah in the D.
Right. Okay. So you should have seen us here, Joel, on a Wednesday night. We cleaned. Shout out to Aaron Thomas, man. That guy cleaned, spent all day Wednesday cleaning our office. We haven't hosted anyone in well over a year, obviously. The office was a pigsty. And Aaron Thomas spent all day cleaning, and we were here. I was here till 8 p.m., which is late because I was up at 3 in the morning, cleaning. So this is the cleanest the office has been in a year and a half.
It looks great. Everyone should see the digs down here in downtown Detroit, and the view, man. We got the view.
We got the view. If you want, I can do this show from here. It'll just be harder for me.
I think no.
I have less information.
You know why? Because you need multiple screens. So when I ask you tough questions, you can look them up on Google.
That's my secret. That's what I do. Joel says, what happened? And I literally Google, what happened at 11:30 p.m.? No, I don't do that. Thank you, Bad Hog, for new rollerblades, Joel. We got a $5.
No more skiing. No more rollerblading. I'm not going to pull a hammy. I already talked about
stick
that.
Stick to the pool.
Stick to the pool today.
Stick to the pool. Okay, Joel, we will see you at the close today. We didn't do it yesterday. We'll see you at the close today.
Get home. Could you keep the spoos above 4,700 till I get home? Because you got the spider up there, Spencer. We're just gonna have to convert you to the spoos. I mean,
I like the spoos overnight. I like looking at the S&P futures before 9 a.m.
You know what?
After 4:30.
Dennis has been a negative influence on you.
But during the day, what's wrong with the SPY? Overnight, I'm with you. I will give you the overnight. That's half the day.
We'll have to do our old spider spoo debate again. But I will tell you though, during the when the markets got crazy, back during COVID and everything, I think the combination of following the spiders and the spoos at the same time, it really helped you figure out what was going on, or what maybe was going to go on, or what you thought was going to go on.
Yeah.
But I think that's a big benefit. But
I was just thinking about that yesterday. I was thinking about that whole period, and I remembered something that I said, and I cringed really hard when I thinking back at it now. Probably one of the dumbest things I've ever said. But I remember when everything hit the fan. The world was literally ending right in March of last year. And I pondered out loud on the show. I was like, should they just close the markets? And then you and Dennis were like, no, they shouldn't close the markets. That's a horrible idea. And I was like, okay, we shouldn't do that.
You want a quick story?
Yeah,
One
sure.
more story? Do we have time?
Yeah, we got time.
Coming on. I was asking myself that same question.
Yeah.
And I don't know if I talked about the emergency trip to Virginia to pick up Emily and move her. And it was on a Friday, and Trump was making a speech.
Yeah. And you thought he was going to shut down the highways, right?
Well, yeah, don't let people know I'm that paranoid. Plus, I didn't want to get stuck in Ohio. I mean, how worse could that have been?
Yeah, it would have been bad.
But Trump was going to speak, and I was driving, and I just was like, I hope he doesn't shut down the markets. I'm just like, we got to keep the markets open.
Yeah.
And Lisa said, I'm not going to let you drive anymore. Like, you're all over the road. And so we had to pull over.
All over the road? What do you mean? You were like...
I'm like, things were hitting the fan. And so we pulled over, and then she started driving.
Okay.
And then, I heard his speech, and, they said, hey, because you got to keep the markets open. Because if they would have closed the markets, I mean, then that would have really, then there were people, are they going to close the banks? It would have inflicted that.
Oh, it would have been bad.
Yeah. So, no, we made it through it. But, Spencer, you do an incredible job here. I mean... it is.
I did not build this set, just to be clear. Shout out to Ron and Aaron for building the set here. I only just bugged them about it for a while.
And you are wearing short sleeves during the winter. I just want you to know that.
I have a jacket. It's like I don't have a jacket here. It's warm under these lights, Joel. You don't want to. You people don't see. We got all these lights up here. It's hot. It's hot.
It is. Well, thanks for having me here.
Surprise visit.
Yep. I had came in and it looks like there's enough room in here for me if I want to start. Is it okay if I start coming back in?
We'll have to kick Bree out of your desk, but yes, I will kick Aaron Bree out. No problem.
But I don't know. I like this setup though. I mean, we might have to get the engineers.
We can fiddle
because I can't do this without. I can't be looking at.
Well, we've got 3 studios. We've got here, we've got there, we've got the other one. We've got room to fiddle.
Okay.
We can fiddle. Yeah.
Can you do phone calls from here? Could you have people call in or not?
Yeah, we can do that, right, Rohan? Maybe not. Well, he's from home.
It's easier when I'm actually at my desk, but yes, we can do phone calls.
Rohan, how you feeling, man? Are you okay? Do we have a test result yet or no?
I've been on the phone for the past hour. I probably have another 2 hours ahead of me to get my results.
Dear Lordy.
Look at Justin Miller breaking the bank with 99 cents here. Holy mackerel.
Everyone, Rohan, we suspect may have COVID, so feel better, Rohan,
so you're
man.
Trying to get me to come back in the office, and you tell me that? No.
Well, he hasn't been here for like a week and a half.
All right, we'll figure it out. But thanks for having me, Spencer.
Thanks for coming on, Joel. Don't forget to take off the headphones. Don't walk away with this. Guys, surprise guest, Joel Elconin. Give him a round of applause in studio. That's a first. Literally haven't seen Joel in the office in almost 2 years. We will get AB back on in a second, and we'll wrap the show up here. But hey, fun show. Oh gosh, and now they're schmoozing, the two of them, and like, it's funny. Aaron was telling me like for a couple of days, he was like Joel's favorite person at Benzinga, but only for a couple of days. Right after that, I want to hear about this when Aaron comes back on. Because I think Aaron went to dinner at Joel's house, and Joel was like, "Oh, Aaron, my new favorite zinger." But that was 3 months ago. Okay, what I want to talk about before we end the show here is I do want to talk about SpaceX a little bit. Sometimes I see stories and I see headlines, and I'm just glad that that's not me. You know what I mean? And this is basically what I thought to myself when I saw the SpaceX news this morning. Which, if you didn't see that, I'm going to pull up the article from who's the outlet here that had it first. Got to give credit where credit is due. SpaceExplored.com are the ones that broke the news. They broke the news of this email, basically, that Elon sent out to SpaceX employees, I guess Thursday or Friday, over the weekend. And this is the money line right there. That's it. This is at the end of the email. What it comes down to is that we face a genuine risk of bankruptcy if we can't achieve a Starship flight rate of at least once every 2 weeks next year. I guess they're having some serious issues with their Raptor boosters that they have not been able to fix. This is coming from Elon Musk himself, right? And, it's hard to tell exactly how much of that is him trying to stress urgency or, obviously we don't know. But I'm just glad that that's not me. Aaron Bree working at SpaceX trying to figure out this Raptor engine. I guess we're having some serious problems there. And they've had a number of executives leave the company in the last year. Some high-level executives leave SpaceX. They're struggling right now to get through this. And I saw that, and I just thought of all the stress we have here at Benzinga, we don't have the risk of bankruptcy. Knock on wood.
Knock on wood.
AB, man, do you have fun schmoozing with Joel?
Yeah, Joel's my fave.
Yeah, you were his favorite person here for like a day?
I don't know. Yeah, I don't know what happened there. I like to think I still am, but I don't know if that's true.
Yeah, Christian's message basically sums up what Elon's email. Actually, no. The other thing that Elon said was, unless you have pressing family matters or are out of town, it's all hands on deck this weekend, is what he said. It was probably not a fun weekend if you work at SpaceX.
This isn't entirely random, but I just want to state for the record that I miss AB's mustache. Like, I legitimately enjoyed that.
It might make a comeback at the point.
It was fun while it lasted.
I threw an ask out there yesterday. If we got up to 300 likes yesterday, I was going to keep it, but
they didn't deliver.
We didn't get enough likes. AB, why do you smell like cleaning supplies? I don't know what that means.
You guys want to listen to my hold music? Can you hear it?
Dude, take it off,
please. I'm
please.
tired of it.
No, take it off.
What is that? What are you on hold for?
To get my COVID test. They didn't email it to me. They said 10 minutes.
Dude, that hold music is triggering.
Yeah.
You just triggered me so hard with that. I can't.
I didn't mind it.
You haven't been on hold like that with that music. I have. We're at 116 likes right now. Can we get to 250 in the next 10 minutes? I think we can. Right now we're at 117. Anyway, I just wanted to talk. I want to bring up the SpaceX thing. Not really a markets headline, but just, sometimes we forget, how much freaking pressure these people are under, whether it's SpaceX, frankly, whether it's Tesla, whether it's any EV, any company that's trying to make a new industry and push society forward in a way. The pressure is ridiculous, and it almost does make me forgive a lot of the crazy shit that Elon says on Twitter, because the guy is under insane otherworldly amounts of stress at all times, working 90 hours a week, I'm sure. The other thing that I was reminded of is, a lot was made Monday when Jack Dorsey stepped down from CEO of Twitter, and there was some criticism levied at Dorsey over the years because he's the CEO of two major publicly traded companies, right? Twitter and Square. And how much attention could he really realistically be paying to both? Well, Elon Musk is the same way, right? He's the CEO of Tesla. He's the CEO of SpaceX. He's got the Boring Company. It just goes to show that, Elon Musk is probably at least 2 times more productive than the average person because he's a freaking genius, but even he has his limits. So a guy like that is probably spending every waking hour for 3 straight days, as this email would seem to imply, obsessed with SpaceX. That means he's not thinking about Tesla, right? The guy's time is always divided. Attention is always divided. I think we'd all do well to remember that Elon Musk, as much of a genius and as crazy efficient as that guy is, it's not like he's 100% focused on Tesla, because he's not. He's got other things going on. So, and maybe SpaceX IPOs one day, who knows? But in which case, that'd be cool. But it's 1:52. We got 8 minutes until the roadmap. We're at 126 likes. Get us to 250, everyone. What else was on our list, man? I'm going through our list to catch up and see if we missed anything. I don't think we did. Oh, did Meta turn red? I think Meta turned red today.
A lot of stocks are kind of coming down from their...
Meta and Netflix both turned red on the day. That's interesting.
Yeah, I think I just saw a headline that the first case of this Omicron variant was found in California.
What? That was a matter of time.
Right.
That was not a matter of if, it's a matter of when.
I want to know how quickly they're able to make new tests for a different kind of variant. I don't know. It seems interesting.
Well, when I had COVID, when I was getting tested, I was like, hey, can you test for Delta? And she said, well, we can, but it'll take a month to get the results to see if you have Delta or not. Or we can just test you for just COVID at all and just assume you have Delta. And I was like, yeah, okay, let's just do that. So we have the ability to test now for different variants. It's not as efficient. It takes a long time. But that would be ideal in the future, probably. They are saying it's way more contagious than Delta, but not as deadly, hopefully. So there's that. Also keeping an eye on software names today because we've got some names after the close. We've got AI reports tonight. C3 AI. AI is your ticker. We've got who else? Where's my earnings calendar here? We got a bunch of earnings tonight. I thought we were done with earnings, but I guess we're not. We got like a couple more days of like some serious earnings reports, and then really it's going to be quiet for the rest of the year.
Until it's not.
Well, no, it'll be quiet. Maybe not actually. If we got new variants going on, I shouldn't say it will be quiet. Something that Aaron and I need to figure out is, are we going to do a show, Aaron, the last week of the year? Because I will be taking time off because it's use it or lose it, and I got to use it.
Well, if you're taking time off, we'll figure it out. Maybe I'll do some solo shows. Maybe I'll fill that up with some good guests. We'll see. We'll discuss that.
We got some time. Hey, if you all want to co-host the show with Aaron the last week of the year, we should do some guest hosts. That's what we should do. Get some guest hosts. That'll be fun. Email us. shows@benzinga.com. Check it out. What's chat saying? Let me catch up on there. Okay. How's your portfolio doing today? You okay? I'm doing okay.
Good.
I'm doing okay. I'm doing for every I got a lot of shitty stocks, frankly. No, I shouldn't say that. I have a lot of stocks that have had shitty years. Okay? However, I've got some winners as well. I got Airbnb doing okay. I've got the overall market that's doing okay. Here's one thing I want to look at right now before we go. How is Starbucks doing? I sold Starbucks. Oh, that's interesting. I've not looked at this chart in probably a couple weeks. Let me pull it up on the screen here. Come on now. Okay, so this is my first time looking at Starbucks in a couple weeks. I sold this at like one. I think I sold it here. I think I sold it like 115 or 114, somewhere in that window. And the reason I sold it is, first off, the reason I bought it is because I thought they were going to announce. I was basically betting on Starbucks announcing a coffee membership program like Panera did. They haven't done that yet. And I sold it because was it Darden Restaurants warned about like serious hardcore staffing shortages, and then I experienced it in real life, and I was like, okay, I'm terrified now. I'm terrified of owning any sort of restaurants. So Starbucks actually has not been doing that bad. Although we do have a moving average crossover, a bearish crossover, the 50-day cross below the 200-day. If you're into that sort of thing, moving average crossovers, right? When the shorter moving average crosses above the longer one, that's bullish, and vice versa if it's below. So that would be that was a couple weeks ago, but that's a bearish sign right there. Anyway, I haven't looked at that chart for a while. Yeah, Amazon's red. Jay's asking if I beat the index, like if I'm outperforming the overall market this year. It's a good question, Jay. I should check on that. No, I in all seriousness, I actually can't wait every year. At the end of the year, I always do my I'm not sure what you would call it. I look at all my accounts, look at all my financials, see how I did, how much money came in, how much money went out, how my investments did, set all up for the year. That's a really fun experience for me. I highly recommend you all do that as well. If you're not like once a year doing just like a full review of like all your finances, you should. It makes you feel in control. Even if you're not in control, it makes you feel in control. It's just good to know what's going on, right? It's good to know what's going on with your overall. It's not, a rebalance or just an analysis. Christian does it monthly. Christian, I actually do it monthly too, but not for my investments. I don't. I do it for like my actual like cash flow, right? What goes in, what goes out. But I do my like a full review of my investments and not even a review, just like let's actually make a note of where we're at for the year, allocation. How do we do? Anything we want to buy or sell or change. I do that every December. That's a fun time for me. Yes, Lone Pigs and Cub. Money does come in. Money comes in. You know where it comes in from? It comes in from Zincoin. That's where it comes in from. I sold all my Zincoin. I'm just kidding. I didn't sell any Zincoin. But yeah, I do once a month for the budget stuff and once a year for the investment stuff, and it's a very fun experience, I have to say. AB, I recommend you do that.
We'll do that, Spencer.
Right.
Maybe we'll do it live on the show.
Oh, that would be weird. I've thought about that. It'd be so personal, though. It's so personal.
Doing a portfolio review.
I'll review like all my finances on the show.
Yeah.
That'd be, oh gosh, I don't know. That'd be weird. Anyway, okay, it's 2:00. We got to wrap. The roadmap is live, going live right now. We're talking the world of NFTs. One of the biggest stories of the year is the emergence of NFTs. So stay tuned to those guys, Chris and Maz, doing their thing as always. Are we at 250 likes?
No,
we
are
not.
not.
At 132. That's disappointing.
Dun, dun, dun.
And yeah, Shelly's doing right. Do it so the IRS will leave me alone. Anyway, everyone have a great weekend, or not great weekend. Have a great rest of your day. I will see you in an hour and a half for the At the Close show with Joel. And yeah, stay green, stay filled, and the roadmap live right now.